Question 1. Topic: Underwriting considerations. Which of the following factors is most likely to be considered by an underwriter when determining the premium for a commercial property insurance policy in Colorado? A. The historical profitability of the insurance company. B. The geographic location and susceptibility to natural disasters. C. The insurance agent's personal relationship with the policyholder. D. The policyholder's prior claims history in another state. Answer: B. The geographic location and susceptibility to natural disasters. Explanation: underwriters evaluate various factors to determine the premium for a commercial property insurance policy. In Colorado, the geographic location and susceptibility to natural disasters, such as hailstorms and wildfires, are critical factors. These risks influence the likelihood of claims and the potential severity of losses. Historical profitability of the insurance company A does not impact individual policy underwriting, while an insurance agent's relationship with the policyholder C might facilitate the process. It should not influence the underwriting decision. The policyholder's prior claims history D is relevant, but claims in other states are less impactful compared to local risk factors. Question 2. Topic: Insurance contracts. In Colorado, which of the following elements must be present for an insurance contract to be legally binding? A. Written agreement, premium payment, insurable interest, and a witness signature. B. Offer acceptance, consideration, and insurable interest. C. Underwriter's approval, premium payment, policyholder's signature, and insurable interest. D. Agent's recommendation, policyholder's consent, consideration, and underwriter's approval. Answer: B. Offer acceptance, consideration, and insurable interest. Explanation: for an insurance contract to be legally binding in Colorado, the following elements must be present: an offer from one party and acceptance by the other, consideration, which is the premium payment, and insurable interest, a legitimate interest in the insured property. A written agreement A is common but not always necessary. Witness signatures A and underwriter's approval C, D are procedural rather than essential legal elements. The agent's recommendation D also is not a legal requirement for contract formation. Question 3. Scenario question. Topic: Claims handling process. Scenario: Mr. Anderson owns a commercial property in Denver, Colorado, insured under a commercial property policy. After severe hailstorm, his building sustained significant roof damage. When filing a claim, he reported that additional interior damage occurred due to water leaks caused by the damaged roof. Upon investigation, it was found that the interior damage was exacerbated by pre-existing maintenance issues. What should Mr. Anderson expect regarding the settlement of his claim? A. The insurer will cover both the roof and interior damage without any deductions. B. The insurer will cover the roof damage but may limit or exclude coverage for the interior damage. C. The insurer will deny the entire claim due to the pre-existing maintenance issues. D. The insurer will cover the interior damage only if Mr. Anderson can prove it was solely caused by the hailstorm. Answer: B. The insurer will cover the roof damage but may limit or exclude coverage for the interior damage. Explanation: in Colorado, commercial property insurance policies typically cover damage caused by hailstorms, including roof damage. However, coverage for interior damage may be limited or excluded if it is exacerbated by pre-existing maintenance issues. Insurance policies require property owners to maintain their property, and neglecting maintenance can lead to exclusions for resultant damages. Therefore, while the insurer will likely cover the roof damage, the settlement for interior damage might be reduced or denied based on the extent to which maintenance issues contributed to the damage. Question 4. Topic: Coverage and exclusions. Which of the following perils is generally excluded from a standard commercial property insurance policy in Colorado unless specifically endorsed? A. Fire. B. Vandalism. C. Flood. D. Theft. Answer: C. Flood. Explanation: standard commercial property insurance policies typically exclude coverage for flood damage. To obtain coverage for this peril, policyholders must purchase a separate flood insurance policy or add a specific flood endorsement to their existing policy. Fire, vandalism, B, and theft, D, are generally included in standard coverage unless specifically excluded. This exclusion exists because flood risks require specialized underwriting and actuarial considerations due to their potential for catastrophic losses. Relevant guidelines. The National Flood Insurance Program (NFIP) provides flood insurance to property owners, and the Colorado Division of Insurance regulates the endorsement and exclusions related to commercial property policies. Question 5. Topic: Liability and legal concepts. In Colorado, what is the purpose of the statute of limitations in relation to liability insurance claims? A. It limits the maximum payout an insurer must provide for a single claim. B. It sets a time limit within which a claim must be filed. C. It restricts the types of claims that can be filed against an insurer. D. It determines the minimum amount an insurer must pay for a valid claim. Answer: B. It sets a time limit within which a claim must be filed. Explanation: the statute of limitations in Colorado establishes the time frame within which a policyholder or claimant must file a liability insurance claim. This legal concept ensures that claims are made within a reasonable period after an incident occurs, providing fairness to both the insurer and the insured. The time limits vary depending on the type of claim and are crucial for maintaining the integrity and efficiency of the claims process. This statute does not limit the maximum payout. They restrict the types of claims, C, or determine the minimum payout, D. Question 6. Scenario question. Topic: Insurance claims. Scenario: Mr. Rivera, who resides in Colorado Springs, Colorado, has an auto insurance policy with collision and comprehensive coverage. While driving during a severe hailstorm, his car is damaged by both hail and a subsequent collision with another vehicle that had lost control. When he files a claim, the insurer offers to cover the hail damage but not the collision damage, citing that the collision was avoidable. What should Mr. Rivera do? A. Accept the partial settlement for hail damage and cover the collision damage out of pocket. B. Request a review of the claim under both the collision and comprehensive coverage. C. File a complaint with the Colorado Division of Insurance against the insurer. D. Cancel the policy and seek coverage from another insurer. Answer: B. Request a review of the claim under both the collision and comprehensive coverage. Explanation: Mr. Rivera should request a review of his claim under both the collision and comprehensive coverage. Comprehensive coverage typically includes damage from hail, while collision coverage applies to damage resulting from collisions. The insurer's initial denial of collision damage may be based on an incorrect assessment of the circumstances. By requesting a review, Mr. Rivera can ensure that both aspects of the incident are considered according to the terms of his policy. Accepting a partial settlement, A, or cancelling the policy, D, are not advisable as first steps. Filing a complaint, C, might be necessary if the review does not resolve the issue. Question 7. Topic: Casualty insurance basics. Which of the following statements about liability coverage in an auto insurance policy in Colorado is correct? A. Liability coverage pays for the policyholder's injuries in an at-fault accident. B. Liability coverage pays for the damages to the policyholder's vehicle in an at-fault accident. C. Liability coverage pays for the damages and injuries the policyholder causes to others in an at-fault accident. D. Liability coverage pays for the policyholder's legal defense costs in a no-fault accident. Answer: C. Liability coverage pays for the damages and injuries the policyholder causes to others in an at-fault accident. Explanation: Liability coverage in an auto insurance policy is designed to protect the policyholder from financial loss if they are found legally responsible for causing injury or property damage to others in an at-fault accident. It covers the cost of damages and injuries to others as well as legal defense costs if the policyholder is sued. It does not cover the policyholder's injuries, A, or damages to their own vehicle, B. Those would typically be covered under personal injury protection, PIP, and collision coverage, respectively. Liability coverage also does not provide legal defense in no-fault accidents, D. Question 8. Topic: Insurance policy analysis. Which part of an insurance policy in Colorado typically contains information about the specific risks insured, the policy limits, and the premium amount? A. Declarations page. B. Insuring agreement. C. Conditions section. D. Exclusions section. Answer: A. Declarations page. Explanation: The declarations page of an insurance policy provides a summary of the essential details, including the specific risks insured, policy limits, premium amount, and the names of the insured and insurer. It serves as a quick reference guide for policyholders to understand the coverage provided. The insuring agreement B outlines the insurer's promise to pay for covered losses. The conditions section C lists the obligations of both the insurer and the insured. The exclusions section D specifies what is not covered by the policy. Question 9. Scenario question. Topic: Workers' compensation insurance. Scenario: MS. Ramirez owns a manufacturing business in Colorado with several employees. One of her employees, Mr. Lee, is injured on the job while operating heavy machinery. Mr. Lee files a workers' compensation claim. MS. Ramirez's workers' compensation policy includes coverage for medical expenses, lost wages, and rehabilitation costs. However, she is unsure if the policy covers additional expenses related to occupational training for Mr. Lee to switch to a less physically demanding role. What should MS. Ramirez do? A. Assume that occupational training costs are not covered and deny any related claims. B. Request clarification from her insurance provider regarding coverage for occupational training. C. Pay for the occupational training out of pocket to avoid complications with the insurer. D. File a complaint with the Colorado Division of Insurance to force coverage for training costs. Answer: B. Request clarification from her insurance provider regarding coverage for occupational training. Explanation: MS. Ramirez should request clarification from her insurance provider to determine if her workers' compensation policy covers occupational training costs. While workers' compensation policies typically cover medical expenses, lost wages, and rehabilitation, coverage for additional occupational training may vary by policy. It is essential to verify the specific terms and conditions of her policy with the insurer before making any decisions. Assuming coverage A, or paying out of pocket C, without verification could lead to unnecessary expenses. Filing a complaint D is premature without first seeking clarification from the insurer. Question 10. Topic: Loss settlement methods. Which loss settlement method is typically used in Colorado to determine the amount payable for a partial loss under homeowners insurance policy? A. Actual cash value (ACV). B. Replacement cost value (RCV). C. Agreed value. D. Functional replacement cost. Answer: B. Replacement cost value (RCV). Explanation: in Colorado, the replacement cost value (RCV) method is commonly used for selling partial losses under a homeowner's insurance policy. RCV pays for the cost to replace the damaged property with materials of like kind and quality without deducting for depreciation. Actual cash value (ACV) deducts depreciation from the replacement cost, which might be used in other contexts but not typically for partial losses in homeowners policies. Agreed value C is a method where the insurer and insured agree on the value of the property at the inception of the policy. Functional replacement cost D pays for the cost to replace with less expensive but functionally equivalent materials, which is less common for standard homeowners policies. Question 11. Topic: Insurance underwriting. What is the primary purpose of using credit scores in the underwriting process for personal auto insurance in Colorado? A. To determine the policyholder's eligibility for state-sponsored insurance programs. B. To establish the policyholder's driving record. C. To assess the risk of future claims based on financial responsibility. D. To verify the policyholder's identity and residency. Answer: C. To assess the risk of future claims based on financial responsibility. Explanation: Credit scores are used in the underwriting process for personal auto insurance in Colorado primarily to assess the risk of future claims based on the policyholder's financial responsibility. Insurers use credit-based insurance scores to predict the likelihood of claims, as studies have shown a correlation between financial behavior and insurance risk. Credit scores are not used to determine eligibility for state-sponsored programs. A. Establish driving records. B. Or verify identity and residency. D. Help insurers evaluate risk and set appropriate premium rates. Question 12. Scenario question. Topic: Insurance contracts. Scenario: Mr. Edwards, who lives in Denver, Colorado, recently purchased a commercial auto insurance policy for his fleet of delivery trucks. he read through the policy and noticed that it includes a condition requiring immediate notice to the insurer in the event of an accident. One of his drivers, Ms. Johnson, gets into a minor accident but doesn't report it to Mr. Edwards until a week later. Mr. Edwards is worried about how this delayed reporting might affect the claim. What should Mr. Edwards expect? A. The insurer will deny the claim entirely due to the delayed reporting. B. The insurer may investigate the claim and possibly reduce the payout due to the delay. C. The insurer will automatically approve the claim since the delay was not Mr. Edwards' fault. D. The insurer will request a waiver for the delayed reporting condition. Answer. B. The insurer may investigate the claim and possibly reduce the payout due to the delay. Explanation. Mr. Edwards should expect that the insurer may investigate the claim and potentially reduce the payout due to the delayed reporting. In Colorado, insurance policies often include conditions requiring prompt notice of accidents to allow timely investigation and mitigation of further damage. While a delay does not automatically lead to a denial, it can affect the claim's handling. The insurer will not automatically approve the claim. C. Or request a waiver. D. The insurer's response will depend on the circumstances and whether the delay has prejudiced the insurer's ability to investigate and settle the claim. Question 13. Topic: Coverage and exclusions. Which of the following scenarios would typically be excluded under a standard homeowner's insurance policy in Colorado? A. Damage caused by a sudden burst pipe. B. Theft of personal property within the home. C. Damage caused by a flood. D. Fire damage to the home. Answer. C. Damage caused by a flood. Explanation. Standard homeowners insurance policies generally exclude damage caused by floods. To obtain coverage for flood damage, policyholders need to purchase a separate flood insurance policy, usually through the National Flood Insurance Program (NFIP) or a private insurer. Damage from a sudden burst pipe, A. Theft of personal property, B. And fire damage, D. Are typically covered under standard homeowners policies. Flood exclusions are standard because the risk requires specialized underwriting and significant potential losses. Question 14. Topic: Insurance claims. In Colorado, what is the insurer's primary responsibility during the investigation phase of a property insurance claim? A. To determine the policyholder's fault in causing the damage. B. To assess the extent of the loss and verify the cause of the damage. C. To negotiate a lower settlement amount with the policyholder. D. To find reasons to deny the claim. Answer. B. To assess the extent of the loss and verify the cause of the damage. Explanation. During the investigation phase of a property insurance claim, the insurer's primary responsibility is to assess the extent of the loss and verify the cause of the damage. This involves examining the property, reviewing the policy terms, and determining whether the damage is covered. The insurer is not focused on determining the policyholder's fault, unless fraud is suspected, nor is their primary goal to negotiate a lower settlement, C. Or find reasons to deny the claim, D. The investigation aims to ensure a fair and accurate settlement in accordance with the policy provisions. Question 15. Scenario question. Topic: Liability and legal concepts. Scenario: MS. Collins, a resident of Aurora, Colorado, owns a small bakery. A customer slips on a wet floor and sustains injuries. The customer files a liability claim against MS. Collins' business, MS. Collins' general liability insurance policy includes a duty to defend a clause. What should MS. Collins expect from her insurer? A. The insurer will deny the claim and leave MS. Collins to handle the legal defense on her own. B. The insurer will cover the medical expenses but will not provide legal defense. C. The insurer will provide legal defense and cover any settlement or judgment up to the policy limits. D. The insurer will provide legal defense only if MS. Collins is found liable. Answer. C. The insurer will provide legal defense and cover any settlement or judgment up to the policy limits. Explanation. MS. Collins should expect her insurer to provide legal defense and cover any settlement or judgment up to the policy limits, as specified by the duty to defend clause in a general liability insurance policy. This clause obligates the insurer to defend the policyholder against claims covered under the policy, regardless of whether the policyholder is ultimately found liable. The insurer's responsibility includes hiring and paying for legal representation and covering the costs of settlements or judgments up to the policy's coverage limits. denying the claim. A. Only covering medical expenses. B. Or providing defense only if found liable. D. Would violate the terms of the duty to defend a cause. Question 16. Topic: Workers' compensation insurance. Which of the following benefits is NOT typically provided under Colorado workers' compensation insurance? A. Medical expenses for treatment of work-related injuries. B. Temporary total disability benefits for lost wages during recovery. C. Compensation for pain and suffering. D. Vocational rehabilitation services to assist with returning to work. Answer: C. Compensation for pain and suffering. Explanation: Workers' compensation insurance in Colorado provides benefits for medical expenses, the temporary total disability benefit, B, and vocational rehabilitation services, D. However, it does not cover compensation for pain and suffering, C. Workers' compensation is designed to cover economic losses related to work-related injuries, such as medical bills, lost wages, and costs associated with rehabilitation and retraining. Pain and suffering, which are non-economic damages, are not compensated under workers' compensation insurance. Question 17. Topic: Insurance contracts. Which of the following is considered an essential element of an insurance contract in Colorado? A. The contract must be notarized by a public official. B. There must be an insurable interest at the time of the loss. C. The policyholder must provide a written testimonial. D. The insurer must offer a loyalty discount. Answer: B. There must be an insurable interest at the time of the loss. Explanation: An essential element of an insurance contract is the presence of an insurable interest at the time of the loss. This means the policyholder must have a financial stake in the insured property or person such that they would suffer a financial loss if a covered event occurs. Notarization by a public official, A, and written testimonials, C, are not requirements for an insurance contract. Offering a loyalty discount, D, is a business practice but not a legal requirement for forming a valid insurance contract. Question 18. Scenario question. Topic: Casualty insurance basics. Scenario: Mr. Patel owns a commercial building in Denver, Colorado, and has a commercial property insurance policy that includes coverage for business interruption. After a severe hailstorm, the building's roof is heavily damaged, leading to the closure of his business for 2 months while repairs are made. Mr. Patel files a business interruption claim. Or should he expect the policy to cover A, only the physical damage to the roof, B, the lost income and extra expenses incurred during the period of restoration, C, the full market value of his business, D, the cost of new equipment to prevent future hail damage? Answer: B, the lost income and extra expenses incurred during the period of restoration. Explanation: Mr. Patel's business interruption insurance is designed to cover the lost income and extra expenses incurred during the period of restoration following a covered event, such as the hailstorm damage to his building's roof. This type of insurance aims to put the business in the same financial position it would have been in if the loss had not occurred. It does not cover only the physical damage to the roof, A, or the full market value of the business, C, nor does it cover the cost of new equipment to prevent future damage, D, that would typically fall under separate coverage or endorsements. Question 19. Topic: Underwriting considerations. Which factor is most likely to influence the underwriting process for a commercial property insurance policy in Colorado? A, the policyholder's personal credit score. B, the age and condition of the building. C, the policyholder's previous personal auto insurance claims. D, the policyholder's residential address. Answer: B, the age and condition of the building. Explanation: In underwriting a commercial property insurance policy, the age and condition of the building are critical factors. These elements help determine the risk of loss and the likelihood of claims. Older buildings or those in poor condition may require higher premiums or specific maintenance requirements to mitigate risks. While personal credit scores can influence certain types of insurance, they are less relevant for commercial property. Previous personal auto insurance claims, C, and the policyholder's residential address, D, do not directly impact commercial property insurance underwriting. Question 20. Topic: Policy provisions and endorsements. What is the purpose of the coinsurance clause ECA commercial property insurance policy in Colorado? A, to ensure the policyholder pays a portion of every loss. B, to limit the insurer's liability to a fixed percentage of the total loss. C. To encourage the policyholder to insure property to its full value. D. To provide coverage for property improvements. Answer: C. To encourage the policyholder to insure property to its full value. Explanation: the coinsurance clause in a commercial property insurance policy encourages policyholders to insure their property to its full value. If the property is underinsured, the coinsurance clause may reduce the amount paid on a claim. Typically, the policyholder must carry insurance equal to a specified percentage, usually 80%, 90%, or 100% of the property's value. If this requirement is not met, the insurer may only pay a proportionate amount of the loss. The clause does not ensure the policyholder pays a portion of every loss A, or limit the insurer's liability to a fixed percentage B, nor does it provide coverage for property improvements D. Question 21. Scenario question. Topic: Insurance claims. Scenario: Ms. Thompson operates a small restaurant in Boulder, Colorado and has a commercial general liability CGL insurance policy. One day, a customer slips on a wet floor and suffers a minor injury. The customer files a claim against Ms. Thompson's business for medical expenses. The insurer investigates and offers to settle the claim for an amount less than the customer demands, stating that the policy includes a duty to settle clause. What should Ms. Thompson expect? A. The insurer will cover the full amount demanded by the customer to avoid litigation. B. The insurer is obligated to settle the claim only if the customer agrees to the offered amount. C. The insurer must settle the claim for a fair amount within the policy limits to avoid further legal costs. D. The insurer will deny the claim since the injury was minor. Answer: C. The insurer must settle the claim for a fair amount within the policy limits to avoid further legal costs. Explanation: Ms. Thompson should expect the insurer to settle the claim for a fair amount within the policy limits to avoid further legal costs. The duty to settle clause requires the insurer to act in good faith and make reasonable efforts to settle claims fairly to protect the policyholder from excessive judgments or litigation costs. The insurer is not obligated to cover the full amount demanded if it is unreasonable, while the customer must agree to the settlement. B. The insurer's duty is to offer a fair settlement. Denying the claim because the injury was minor, D, would be inappropriate if the claim is valid and falls within the policy's coverage. Question 22. Topic: Policy provisions and endorsements. Which of the following endorsements in a homeowner's insurance policy in Colorado would provide coverage for damages caused by sewer backups? A. Ordinance or law endorsement. B. Sewer and drain backup endorsement. C. Scheduled personal property endorsement. D. Earthquake endorsement. Answer: B. Sewer and drain backup endorsement. Explanation: a sewer and drain backup endorsement provides coverage for damages caused by the backup of sewers or drains, which is typically excluded from standard homeowners insurance policies. The ordinance or law endorsement A covers increased costs due to building codes. The scheduled personal property endorsement C provides additional coverage for specific valuable items. The earthquake endorsement D covers damage caused by earthquakes. To address the risk of sewer backup, policyholders must specifically add the sewer and drain backup endorsement. Question 23. Topic: Liability and legal concepts. Under Colorado law, which of the following is a key characteristic of an occurrence equal liability insurance policy? A. An event that is intentional and expected by the insured. B. An event that is accidental and results in bodily injury or property damage. C. An event that only results in property damage, regardless of cause. D. An event that is planned and controlled by the insured. Answer: B. An event that is accidental and results in bodily injury or property damage. Explanation: the occurrence equal liability insurance policy is typically defined as an event that is accidental and results in bodily injury or property damage. It must be unforeseen and unintended by the insured. Intentional acts A and planned events D are not considered occurrences under liability policies. The term occurrence usually encompasses both bodily injury and property damage, not just property damage alone. See Question 24. Scenario question. Topic: Insurance contracts. Scenario: Ms. Robinson, who lives in Colorado Springs, Colorado, purchases a homeowner's insurance policy. She is concerned about the possibility of wildfires in her area and wants to ensure her policy covers fire damage. During the application process, she asked the insurance agent if her policy covers all types of fire damage, and the agent assured her it does. However, Ms. Robinson did not receive this assurance in writing. If a wildfire damages her home, what should Ms. Robinson expect regarding her coverage? A. Her policy will automatically cover all fire damage since it was verbally assured by the agent. B. The insurer may deny coverage for wildfire damage if it is excluded in the policy despite the agent's verbal assurance. C. Her policy will cover wildfire damage only if she can prove the agent's verbal assurance. D. The insurer will provide partial coverage based on the verbal assurance. Answer: B. The insurer may deny coverage for wildfire damage if it is excluded in the policy despite the agent's verbal assurance. Explanation: Ms. Robinson should expect that the insurer may deny coverage for wildfire damage if it is specifically excluded in the policy, regardless of the agent's verbal assurance. Insurance contracts must be in writing, and verbal statements by agents are generally not binding unless documented in the policy or endorsements. If wildfire damage is an excluded peril in her homeowner's insurance policy, the insurer is not obligated to cover it despite any verbal assurances from the agent. Question 25. Topic: Valuation of property. In Colorado, what is the significance of using replacement cost REC or actual cash value received in property insurance policies? A. Replacement cost includes depreciation, while actual cash value does not. B. Replacement cost provides the market value of the property at the time of loss. C. Replacement cost covers the cost to replace the damaged property with new property of similar kind and quality without deduction for depreciation. D. Actual cash value covers the full cost of repairs without considering depreciation. Answer: C. Replacement cost covers the cost to replace the damaged property with new property of similar kind and quality without deduction for depreciation. Explanation: In Colorado, using replacement cost REC in property insurance means that the policy will cover the cost to replace the damaged property with new property of similar kind and quality without deduction for depreciation. This is beneficial for policyholders as it allows them to restore their property to its pre-loss condition. In contrast, an actual cash value received A and D takes into account depreciation, paying the depreciated value of the property at the time of loss. RC does not provide the market value of the property, B, but the cost to replace it. Question 26. Topic: Insurance contracts. What role does the insuring agreement play in an insurance contract in Colorado? A. It defines the premium payment schedule. B. It outlines the coverage provided by the insurer and the risks covered. C. It lists all the exclusions and limitations of the policy. D. It provides the policyholder's personal information. Answer: B. It outlines the coverage provided by the insurer and the risks covered. Explanation: The insuring agreement in an insurance contract is a critical component that outlines the coverage provided by the insurer and the specific risks that are covered under the policy. It is the core of the insurance contract, detailing the promises made by the insurer to pay for losses resulting from covered perils. The premium payment schedule A, exclusions and limitations, C, and policyholders' personal information, D, that are found in other sections of the policy but are not part of the insuring agreement. Question 27. Scenario question. Topic: Claims handling process. Scenario: Mr. Jackson owns a home in Fort Collins, Colorado. After a severe windstorm, his roof is damaged. He promptly files a claim with his homeowner's insurance company. The insurer sends an adjuster to inspect the damage and determine the extent of the loss. Mr. Jackson is concerned about the time it will take to receive his claim payment. According to Colorado law, how should the insurer handle this claim? A. The insurer must make an initial claim payment within 24 hours of the inspection. B. The insurer must notify Mr. Jackson of their decision on the claim within a reasonable time, typically within 30 days. C. The insurer is only required to make a payment after all repairs are completed. D. The insurer can take as long as needed to investigate and settle the claim. Answer: B. The insurer must notify Mr. Jackson of their decision on the claim within a reasonable time, typically within 30 days. Explanation: Under Colorado law, the insurer is required to handle claims promptly and must notify the policyholder of their decision regarding the claim within a reasonable time, typically within 30 days. This ensures that the policyholder is informed about the status of their claim without undue delays. While the initial payment does not need to be made within 24 hours, the insurer should act promptly. Payments are typically made based on the policy terms and the adjuster's assessment, not after all repairs are completed. C. Taking an indefinite amount of time. D. Is not permissible under Colorado regulations, which mandate timely and fair claims processing. Question 28. Topic: Underwriting considerations. When underwriting a commercial liability insurance policy in Colorado, which factor is typically not considered? A. Type of business operations and industry risks. B. Location of the insured business. C. Age, gender, and marital status of the business owner. D. Previous claims history of the insured business. Answer: C. Age, gender, and marital status of the business owner. Explanation: when underwriting a commercial liability insurance policy in Colorado, factors such as the type of business operations, A. Location of the insured business, B. And previous claims history, D. Are typically considered. These factors help insurers assess the risk associated with insuring the business. However, personal characteristics such as age, gender, and marital status of the business owner, C. Are not relevant to the underwriting process for commercial liability insurance. Insurers focus on business-related risks and operational factors that could affect claims frequency and severity. Question 29. Topic: Insurance industry trends and developments. What is a significant trend in the insurance industry that impacts policyholders in Colorado? A. Increasing availability of flood insurance coverage. B. Decreasing premiums for earthquake insurance. C. Simplification of insurance policy language. D. Rising adoption of cyber insurance policies. Answer: D. Rising adoption of cyber insurance policies. Explanation: a significant trend in the insurance industry that impacts policyholders in Colorado is the rising adoption of cyber insurance policies. With increasing cyber threats and data breaches affecting businesses and individuals, there is a growing demand for insurance coverage to protect against cyber risks. Cyber insurance policies provide coverage for losses related to data breaches, cyber attacks, and other cyber incidents, which are becoming more prevalent in today's digital world, while flood insurance availability, A. Earthquake insurance premiums, B. And policy language simplification, C. are also important. The adoption of cyber insurance addresses a critical emerging risk. Question 30. Scenario question. Topic: Insurance claims. Scenario: Mr. Davis owns a commercial property in Aspen, Colorado, insured under a commercial property insurance policy. A severe winter storm causes extensive damage to the roof of his building. Mr. Davis promptly files a claim with his insurer. After assessing the damage, the insurer determines that the roof needs to be completely replaced due to the storm damage. How will the insurer typically settle this claim under the policy? A. Pay for the actual cash value, a CV, of the damaged roof. B. Pay for the replacement cost of the damaged roof. C. Pay for a portion of the replacement cost based on depreciation. D. Deny the claim due to the storm being an act of God. Answer: B. Pay for the replacement cost of the damaged roof. Explanation: under Mr. Davis commercial property insurance policy in Colorado, the insurer will typically settle the claim by paying for the replacement cost of the damaged roof. Replacement cost coverage provides for the cost to replace or repair the property with materials of like kind and quality, without deduction for depreciation up to the policy limits. This allows Mr. Davis to restore his building to its pre-loss condition after the storm damage. Paying for the actual cash value (SEVA) would deduct depreciation, while partial payment based on depreciation (C) is not applicable under replacement cost coverage. Denying the claim due to the storm being an act of God (D) would typically not apply unless specifically excluded in the policy. Question 31. Topic: Casualty insurance basics. In Colorado, which of the following types of casualty insurance policies typically covers legal liability arising from bodily injury or property damage caused by the insured's actions? A. Comprehensive general liability (CGL) insurance. B. Professional liability insurance. C. Errors and omissions (EO) insurance. D. Directors and officers (DO) insurance. Answer A. Comprehensive general liability CGL insurance. Explanation: comprehensive general liability CGL insurance in Colorado typically covers legal liability arising from bodily injury or property damage caused by the insured's actions. This type of policy provides broad coverage for various liabilities that a business or individual may face, such as slip and fall accidents or property damage caused by negligence. Professional liability insurance, B. Errors and omissions, EO insurance, C. And directors and officers, DO insurance, D. Are specific types of liability insurance that cover different risks, such as professional negligence, errors in professional services, and wrongful acts by directors and officers, respectively. Question 32. Topic: Insurance policy analysis. Which component of an insurance policy in Colorado outlines the specific circumstances under which coverage will not be provided? A. Insuring agreement. B. Declarations page. C. Exclusions and limitations. D. Endorsements. Answer: C. Exclusions and limitations. Explanation: in Colorado, the exclusions and limitations section of an insurance policy outlines the specific circumstances or risks that are not covered under the policy. These exclusions clarify the scope of coverage and help insurers manage risks by excluding certain perils or conditions from coverage. The insuring agreement A outlines what is covered under the policy, while the declarations page B provides specific details about the policyholder and insured property. Endorsements D modify or add to the standard policy terms but do not define exclusions. Question 33. Scenario question. Topic: Underwriting considerations. Scenario: MS Garcia is applying for a personal auto insurance policy in Denver, Colorado. During the application process, she discloses that she frequently uses her vehicle for ride-sharing services. The insurance agent informs her that standard personal auto policies may not cover commercial use like ride-sharing. What should MS Garcia consider regarding her insurance needs? A. She should purchase a commercial auto insurance policy to cover ride-sharing activities. B. She could continue using her personal auto policy without additional coverage. C. She should rely on the ride-sharing company's insurance for coverage. D. She should switch to a policy that covers both personal and commercial use. Answer: A. She should purchase a commercial auto insurance policy to cover ride-sharing activities. Explanation: in Colorado, standard personal auto insurance policies typically exclude coverage for commercial activities like ride-sharing. MS Garcia should consider purchasing a commercial auto insurance policy A that specifically covers her activities as a rideshare driver. Continuing to use a personal auto policy without proper coverage B could lead to coverage gaps if an accident occurs while she is engaged in ride-sharing. Relying solely on the ride-sharing company's insurance C may not provide adequate coverage for all potential liabilities. Switching to a policy that covers both personal and commercial use D is another viable option, provided it meets her insurance needs and budget. Question 34. Topic: Insurance underwriting. When underwriting a homeowner's insurance policy in Colorado, which factor is typically NOT considered? A. Construction materials of the home. B. Fire protection services in the area. C. Gender and age of the homeowner. D. Location of the home. Answer: C. Gender and age of the homeowner. Explanation: when underwriting a homeowner's insurance policy in Colorado, factors such as the construction materials of the home A, fire protection services in the area B, and location of the home D are typically considered. These factors help insurers assess the risk of loss associated with insuring the property. However, personal characteristics such as gender and age of the homeowner C are not relevant to the underwriting process for homeowners insurance. Insurers focus on property-related risks and factors that could affect the likelihood of claims. Question 35. Topic: Ethics and professional conduct. Which ethical principle guides insurance agents and brokers in Colorado to act in the best interests of their clients? A. Principle of loyalty. B. Principle of fairness. C. Principle of honesty. D. Principle of competence. Answer: A. Principle of loyalty. Explanation: the principle of loyalty guides insurance agents and brokers in Colorado to act in the best interests of their clients. This principle requires agents to prioritize the interests of their clients above their own or those of the insurance companies they represent. Agents must provide honest and competent advice. C. D. Treat clients fairly. B. And act with integrity. C. But loyalty. A. Specifically emphasizes the duty to serve clients' best interests. Question 36. Scenario question. Topic: Insurance claims. Scenario: Mr. Lee, who resides in Boulder, Colorado, owns a vintage car insured under a classic car insurance policy. One day, while parked in his garage, the car suffers damage due to a sudden hailstorm. Mr. Lee files a claim with his insurer to repair the hail damage. How will the insurer typically handle this claim under the classic car insurance policy? A. Pay for the actual cash value of the car. B. Pay for the agreed value or stated value of the car. C. Pay for the depreciated value of the car. D. Deny the claim due to the age of the car. Answer: B. Pay for the agreed value or stated value of the car. Explanation: Under a classic car insurance policy in Colorado, the insurer will typically handle the claim by paying for the agreed value or stated value of the car. Classic car policies often allow the insured to agree on a value for the vehicle based on its unique characteristics and condition. This agreed value is predetermined and does not fluctuate with market depreciation, providing Mr. Lee with sufficient coverage to restore his vintage car to its pre-loss condition. Paying for the actual cash value (SEV) would deduct depreciation, which is not typical for classic cars. Depreciated value (C) and denial due to the age of the car (D) are not appropriate under an agreed value policy. Question 37. Topic: State insurance laws and regulations. In Colorado, which entity oversees the licensing and regulation of insurance producers? A. Colorado Department of Motor Vehicles (DMV). B. Colorado Division of Insurance. C. Colorado Department of Labor and Employment. D. Colorado Department. Answer: B. Colorado Division of Insurance. Explanation: The Colorado Division of Insurance oversees the licensing and regulation of insurance producers in the state. This regulatory body ensures that insurance producers meet licensing requirements, adhere to ethical standards, and comply with state insurance laws and regulations. The Colorado Department of Motor Vehicles (DMVA) handles vehicle registration and driver licensing, not insurance licensing. The Colorado Department of Labor and Employment (C) focuses on labor-related issues, while the Colorado Department of Revenue (D) manages taxation and revenue collection. Question 38. Topic: Insurance claims handling. Under Colorado law, what is the purpose of the subrogation process in insurance claims? A. To deny claims that are not covered under the policy. B. To investigate fraudulent claims. C. To recover costs from responsible third parties after paying a claim. D. To delay the claims settlement process. Answer: C. To recover costs from responsible third parties after paying a claim. Explanation: In Colorado, the subrogation process in insurance claims allows insurers to recover costs from responsible third parties after they have compensated the insured for a covered loss. This process helps insurers minimize their financial losses by pursuing reimbursement from parties legally liable for the damages or losses incurred by the insured. Subrogation does not involve denying claims, A. Investigating fraudulent claims, B. Or delaying the claims settlement process, D. But rather facilitates recovery of costs to maintain insurer profitability and keep premiums stable. Question 39. Scenario question. Topic: Workers' compensation insurance. Scenario: Mr. Rodriguez owns a construction company in Colorado Springs, Colorado, with several employees. One of his employees, Joe, suffers a serious injury while operating heavy machinery on a construction site. Joe requires extensive medical treatment and is unable to work for an extended period. What role does workers' compensation insurance play in this scenario? A. Workers' compensation insurance will cover Joe's medical expenses and lost wages. B. Workers' compensation insurance is not applicable to injuries caused by heavy machinery. C. Workers' compensation insurance covers only partial medical expenses for employees. D. Workers' compensation insurance is handled by the federal government, not the state. Answer: A. Workers' compensation insurance will cover Joe's medical expenses and lost wages. Explanation: Workers' compensation insurance in Colorado provides coverage for employees who suffer work-related injuries or illnesses. In this scenario, Joe's injury while operating heavy machinery qualifies for workers' compensation benefits, which include coverage for medical expenses, rehabilitation costs, and lost wages due to temporary or permanent disability. Workers' compensation insurance is mandatory for most employers in Colorado and serves to protect both employees and employers by providing financial support and ensuring compliance with state regulations. Claims are handled through private insurance carriers or self-insured employers, not the federal government. Question 40. Topic: Policy provisions and endorsements. What is the purpose of an insurance policy endorsement in Colorado? A. To cancel the insurance policy. B. To extend coverage to additional insured parties. C. To increase the insurance premium. D. To reduce the coverage limits. Answer: B. To extend coverage to additional insured parties. Explanation: an insurance policy endorsement in Colorado serves the purpose of modifying or adding to the terms and conditions of the standard insurance policy. Specifically, an endorsement can extend coverage to additional insured parties, such as adding a spouse or business partner to a homeowner's or commercial insurance policy. Endorsements do not typically cancel the policy, A. Increase the premium, C. Or reduce coverage limits, D. But rather customize the policy to meet the insured's specific needs or circumstances. Question 41. Topic: Loss settlement methods. In Colorado, how does replacement cost coverage differ from actual cash value, SCV, coverage in property insurance? A. Replacement cost coverage deducts depreciation, while A. CV coverage does not. B. Replacement cost coverage includes deductibles, while CV coverage does not. C. Replacement cost coverage pays more than the market value of the property. D. Replacement cost coverage only applies to total losses, while A. CV coverage applies to partial losses. Answer: A. Replacement cost coverage deducts depreciation, while A. CV coverage does not. Explanation: in Colorado, replacement cost coverage in property insurance reimburses the policyholder for the cost to replace damaged property with new property of similar kind and quality without deducting for depreciation. This ensures that the insured can restore the property to its pre-loss condition. Actual cash value, SCV coverage, on the other hand, factors in depreciation, paying the current market value of the property at the time of loss, which may be less than the replacement cost. Replacement cost coverage does not include deductibles, B, and can apply to both total and partial losses, D, depending on the policy terms. Question 42. Scenario question. Topic: Coverage and exclusions. Scenario: Mrs. White owns a jewelry store in Denver, Colorado. She recently purchased a jewelry insurance policy to protect her inventory of high-value diamonds and gemstones. During a routine inventory check, Mrs. White discovers that several valuable diamonds are missing. She suspects theft. Will Mrs. White's jewelry insurance policy typically cover this loss? A. Yes, because theft of jewelry is a covered peril under most jewelry insurance policies. B. No, because theft is typically excluded from jewelry insurance policies. C. Yes, but only if Mrs. White has a separate theft endorsement on her policy. D. No, because the missing diamonds were not reported within 24 hours. Answer: C. Yes, but only if Mrs. White has a separate theft endorsement on her policy. Explanation: in Colorado, standard jewelry insurance policies may require separate theft endorsement to cover losses due to theft, especially for high-value items like diamonds. While theft of jewelry is generally a covered peril, some policies may exclude or limit coverage without a specific theft endorsement. B. Mrs. White's policy coverage depends on the specific terms and endorsements she selected when purchasing the insurance. Reporting requirements, D, may vary but are not typically limited to a 24-hour window for coverage determination. Question 43. Topic: Insurance contract formation. In Colorado, which element is essential for the formation of a valid insurance contract? A. Agreement between the insured and insurer. B. Payment of insurance premiums. C. Written policy endorsements. D. Completion of underwriting process. Answer: A. Agreement between the insured and insurer. Explanation: in Colorado, for a valid insurance contract to be formed, there must be mutual agreement between the insured and insurer regarding the terms and conditions of coverage. This agreement is typically documented in the insurance policy, which outlines the rights, obligations, and coverage provided by the insurer in exchange for premium payments. While payment of premiums B. Written policy endorsements. C. And completion of the underwriting process. D. Are important aspects of the insurance contract process. They are not sufficient on their own to establish a binding contract without the agreement of both parties. Question 44. Topic: Emerging insurance trends. What is a significant trend in casualty insurance impacting Colorado policyholders? A. Decreasing coverage for natural disasters. B. Increasing use of telematics in auto insurance. C. Reduction in liability limits for businesses. D. Expansion of coverage for cyber liability. Answer: D. Expansion of coverage for cyber liability. Explanation: a significant trend in casualty insurance impacting Colorado policyholders is the expansion of coverage for cyber liability. With the increasing frequency and severity of cyber attacks, businesses and individuals are seeking insurance coverage to protect against financial losses and liabilities associated with data breaches, ransomware attacks, and other cyber incidents. Cyber liability insurance policies in Colorado offer coverage for legal costs, data recovery expenses, and notification requirements following a cyber event. While trends in natural disaster coverage, A. Telematics in auto insurance, B. And liability limits for businesses, C. Are also important. Cyber liability expansion addresses a critical emerging risk. Question 45. Scenario question. Topic: Coverage and exclusions. Scenario: Mr. Johnson owns a historic building in Colorado Springs, Colorado, insured under a commercial property insurance policy. A severe hailstorm causes extensive damage to the roof and exterior walls of the building. Mr. Johnson promptly files a claim with his insurer. How will the insurer typically handle this claim under the commercial property insurance policy? A. Pay for the actual cash value (SEV) of the damaged property. B. Pay for the replacement cost of the damaged property. C. Deny the claim due to the age of the building. D. Offer a partial payment based on depreciation. Answer: B. Pay for the replacement cost of the damaged property. Explanation: under Mr. Johnson's commercial property insurance policy in Colorado, the insurer will typically handle the claim by paying for the replacement cost of the damaged property. Replacement cost coverage reimburses the insured for the cost to repair or replace the damaged property with materials of like kind and quality without deducting for depreciation. This allows Mr. Johnson to restore his historic building to its pre-loss condition following the hailstorm damage. Paying for the actual cash value (SEVA) would deduct depreciation while denying the claim. C. Or offering partial payment based on depreciation. D. Are not appropriate under replacement cost coverage unless specified in policy terms. Question 46. Topic: Insurance policy analysis. What is the purpose of conditions and endorsements in an insurance policy in Colorado? A. To specify the insurance premium amount. B. To outline the scope of coverage provided. C. To establish the insurer's financial rating. D. To regulate the claims handling process. Answer: B. To outline the scope of coverage provided. Explanation: conditions and endorsements in an insurance policy in Colorado serve the purpose of outlining the scope of coverage provided under the policy. Conditions specify the rights and responsibilities of both the insured and insurer, such as requirements for claims reporting or policy renewal terms. Endorsements modify or add to the standard policy terms to customize coverage based on the insured's specific needs or circumstances. Conditions and endorsements do not typically specify the insurance premium amount. A. Establish the insurer's financial rating. C. Or regulate the claims handling process. D. But rather clarify and define the coverage provisions. Question 47. Topic: Workers' compensation insurance. Under Colorado law, which party is responsible for providing workers' compensation benefits to injured employees? A. Employer. B. Insurance agent. C. State government. D. Healthcare provider. Answer: A. Employer. Explanation: under Colorado law, employers are responsible for providing workers' compensation benefits to injured employees. Workers' compensation insurance covers medical expenses, rehabilitation costs, and lost wages for employees who suffer work-related injuries or illnesses. Employers must carry workers' compensation insurance or be self-insured to comply with state regulations and provide financial protection for employees in case of job-related accidents or illnesses. Insurance agents B. Assist with policy procurement but are not responsible for benefits provision. The state government C. Oversees workers' compensation regulations and enforcement, while healthcare providers D. Deliver medical treatment but do not administer benefits directly. Question 48. Scenario question topic Casualty insurance. Scenario MS. Parker owns a small business in Fort Collins, Colorado, insured under a commercial general liability (CGL) insurance policy. A customer slips and falls on a wet floor inside her shop, resulting in injuries requiring medical treatment. The customer threatens legal action against MS. Parker for negligence. How will the CGL insurance policy typically respond to this situation? A. By providing coverage for legal defense costs and any damages awarded. B. By denying coverage due to the customer's contributory negligence. C. By offering limited coverage for medical expenses only. D. By excluding coverage for slip and fall accidents. Answer A. By providing coverage for legal defense costs and any damages awarded. Explanation. Under MS. Parker's commercial general liability (CGL) insurance policy in Colorado, the policy will typically respond to the situation by providing coverage for legal defense costs and any damages awarded in the event of a covered liability claim, such as a slip and fall accident. CGL policies protect businesses against claims of bodily injury, property damage, and personal and advertising injury arising from their operations. Coverage extends to legal defense costs and settlement or judgment amounts, subject to policy limits and terms. Denying coverage B. Based on contributory negligence, limiting coverage to medical expenses only C. Or excluding coverage for slip and fall accidents D. Would depend on specific policy exclusions or conditions, which are typically outlined in the policy. Question 49. Topic: Lost settlement methods. Under Colorado insurance regulations, what is the purpose of appraisal in the claims settlement process? A. To determine the cause of loss. B. To assess the financial impact of the loss. C. To evaluate the replacement cost of damaged property. D. To resolve disputes over the value of the loss. Answer D. To resolve disputes over the value of the loss. Explanation. In Colorado, appraisal in the claims settlement process serves the purpose of resolving disputes over the value of the loss when the insured and insurer cannot agree on the amount of the claim. Appraisal involves the appointment of impartial appraisers by both parties to evaluate and determine the value of the loss. The appraisers assess the extent of damage, cost of repairs or replacement, and other relevant factors to reach a fair and binding decision. Appraisal does not typically determine the cause of loss, say, assess the financial impact, B, or evaluate replacement cost, C, unless these factors are pertinent to the disputed claim value. Question 50. Topic: Insurance industry ethics. Which ethical principle guides the insurance professionals in Colorado to maintain confidentiality and protect client information? A. Principle of fairness. B. Principle of integrity. C. Principle of confidentiality. D. Principle of transparency. Answer: C. Principle of confidentiality. Explanation. The principle of confidentiality guides insurance professionals in Colorado to maintain strict confidentiality and protect client information from unauthorized disclosure. This principle ensures that insurance agents and brokers handle sensitive client data with care and respect privacy rights. Upholding confidentiality, C. helps build trust with clients and demonstrates professionalism in managing personal and financial information. What principles of fairness A. Integrity, B. and transparency D. are also important ethical standards. Confidentiality specifically addresses the safeguarding of client data in accordance with state and federal privacy laws. Question 51. Scenario question. Topic: Policy interpretation and analysis. Scenario: Mr. Adams purchased a homeowner's insurance policy in Aurora, Colorado to cover his primary residence. Due to severe storms, a large tree falls on Mr. Adams' house, causing significant damage to the roof and exterior walls. Mr. Adams files a claim with his insurer. How will the insurer typically assess coverage under the homeowner's insurance policy? A. By inspecting the property to verify the cause of loss. B. By offering coverage for only partial damages. C. By denying coverage due to lack of maintenance. D. By paying for the cost to repair or replace the damaged property. Answer D. By paying for the cost to repair or replace the damaged property. Explanation: under Mr. Adams' homeowners insurance policy in Aurora, Colorado, the insurer will typically assess coverage by paying for the cost to repair or replace the damaged property, subject to policy terms and deductibles. Homeowners insurance policies generally cover damages caused by perils such as falling trees due to storms, ensuring that policyholders can restore their homes to their pre-loss condition. The insurer may inspect the property to verify the cause and extent of the loss, but will typically provide coverage for the full cost of necessary repairs or replacement. D. Denying coverage. C. For lack of maintenance or offering partial damages. B. Would depend on specific policy exclusions or conditions. Question 52. Topic: Insurance claims handling. Under Colorado insurance regulations, what is the purpose of a reservation of rights letter sent by an insurer to a policyholder? A. To deny coverage for the claim. B. To delay the claim's settlement process. C. To inform the policyholder about potential coverage issues. D. To terminate the insurance policy. Answer: C. To inform the policyholder about potential coverage issues. Explanation: in Colorado, a reservation of rights letter serves the purpose of informing the policyholder about potential coverage issues that may affect the insurer's obligation to provide benefits under the insurance policy. The letter notifies the policyholder that the insurer is investigating the claim and reserves the right to deny coverage based on specific policy terms, conditions, or exclusions. It does not automatically deny coverage. A. Delay the claim's settlement process. B. Or terminate the insurance policy. D. But rather clarifies the insurer's position regarding coverage and legal rights. Question 53. Topic: Underwriting considerations. What factor do insurers in Colorado typically consider when assessing the risk associated with insuring a commercial property? A. Credit score of the property owner. B. Location and condition of the property. C. Number of employees at the property. D. Type of vehicle used for property maintenance. Answer: B. Location and condition of the property. Explanation: when assessing the risk associated with insuring a commercial property in Colorado, insurers typically consider factors such as the location and condition of the property. The property's location affects exposure to natural disasters, crime rates, and proximity to fire protection services, influencing the risk of loss. Insurers also evaluate the physical condition and maintenance of the property to assess potential hazards or risks that may lead to claims. While credit score A, number of employees, C, may be considered for other types of insurance, they are less relevant for commercial property underwriting. The type of vehicle D, used for maintenance, is also less pertinent to property risk assessment. Question 54. Scenario question. Topic: Policy provisions and endorsements. Scenario: MS. Rivera owns a rental property in Boulder, Colorado, insured under a landlord insurance policy. A tenant accidentally starts a kitchen fire that damages the cabinets and appliances. MS. Rivera files a claim with her insurer. How will the insurer typically handle this claim under the landlord insurance policy? A. By denying coverage due to tenant negligence. B. By paying for the actual cash value (SEV) of the damaged property. C. By requiring MS. Rivera to pay a higher deductible. D. By paying for the cost to repair or replace the damaged property. Answer: D. By paying for the cost to repair or replace the damaged property. Explanation: under MS. Rivera's landlord insurance policy in Boulder, Colorado, the insurer will typically handle the claim by paying for the cost to repair or replace the damaged cabinets and appliances caused by the kitchen fire. Landlord insurance policies cover structural damage and repairs resulting from tenant negligence or accidents, ensuring that property owners like MS. Rivera can restore their rental properties to their pre-loss condition. Denying coverage due to tenant negligence may depend on policy exclusions, but standard policies typically cover accidental damages. Paying for the actual cash value (SCV) is less common for property damage claims, and deductibles (C) apply but do not determine coverage for repairs or replacements. Question 55. Topic: Insurance contracts. Which element is essential for the formation of a valid insurance contract in Colorado? A. Payment of the insurance premium. B. Issuance of the insurance policy. C. Offer and acceptance of coverage. D. Review of policy endorsements. Answer: C. Offer and acceptance of coverage. Explanation. In Colorado, the essential element for the formation of a valid insurance contract is the offer and acceptance of coverage between the insured and insurer. Offer refers to the proposal made by the insured seeking coverage, while acceptance occurs when the insurer agrees to provide coverage under the terms outlined in the insurance policy. Payment of the insurance premium and issuance of the policy B and the subsequent steps following offer and acceptance and do not establish the initial contract formation. Reviewing policy endorsements D occurs after the contract is formed to modify or add to the policy terms. Question 56. Topic: Ethics and professional conduct. Which ethical principle guides insurance professionals in Colorado to disclose all material facts to clients when recommending insurance products? A. Principle of confidentiality. B. Principle of fairness. C. Principle of disclosure. D. Principle of integrity. Answer: C. Principle of disclosure. Explanation: the principle of disclosure guides insurance professionals in Colorado to disclose all material facts to clients when recommending insurance products. This principle ensures transparency and informed decision-making by clients regarding insurance coverage options, exclusions, limitations, and associated costs. By disclosing material facts, insurance professionals uphold ethical standards and facilitate fair and honest communication with clients. While principles of confidentiality A, fairness B, and integrity D are also fundamental ethical standards, disclosure specifically addresses the obligation to provide comprehensive information to clients for informed consent. Question 57. Scenario question. Topic: Coverage and exclusions. Scenario: Mr. Lee owns a commercial property in Denver, Colorado, insured under business owner's policy BOP. A severe windstorm causes damage to the roof and exterior of the building. Mr. Lee files a claim with his insurer. How will the insurer typically handle this claim under the BOP? A. By denying coverage due to acts of nature. B. By paying for the cost to repair or replace the damaged property. C. By offering coverage for only partial damages. D. By requiring Mr. Lee to pay a higher deductible. Answer: B. By paying for the cost to repair or replace the damaged property. Explanation: under Mr. Lee's business owner's policy BOP in Denver, Colorado, the insurer will typically handle the claim by paying for the cost to repair or replace the damaged roof and exterior caused by the windstorm. BOP policies generally cover damages from perils such as windstorms, ensuring that business owners can restore their properties to their pre-loss condition. Denying coverage for acts of nature may depend on policy exclusions, but standard BOP policies typically cover windstorm damages. Offering coverage for partial damages C and deductible requirements D are considerations in claims settlement but do not determine coverage for repairs or replacements. Question 58. Topic: Casualty insurance. Which type of liability coverage in Colorado typically protects businesses against claims of bodily injury or property damage caused by their operations or products? A. Professional liability insurance. B. Commercial general liability insurance, CGL. C. Directors and officers liability insurance. D. Errors and omissions insurance. Answer: B. Commercial general liability insurance, CGL. Explanation: in Colorado, commercial general liability insurance, CGL, typically protects businesses against claims of bodily injury or property damage caused by their operations, products, or premises. CGL policies provide coverage for legal defense costs, settlements, and judgments resulting from covered liability claims, ensuring financial protection against lawsuits alleging negligence or harm. Professional liability insurance covers errors and omissions in professional services, while directors and officers liability insurance C protects against claims related to managerial decisions. Errors and omissions insurance D covers professional negligence but is not typically associated with bodily injury or property damage claims. Question 59. Topic: Underwriting considerations. What factor do insurers in Colorado typically assess when determining the premium rates for homeowners insurance policies? A. Credit score of the insured. B. Age and gender of the insured. C. Square footage of the insured property. D. Crime rate in the insured area. Answer: D. Crime rate in the insured area. Explanation: when determining premium rates for homeowners insurance policies in Colorado, insurers typically assess factors such as the crime rate in the insured area. Crime rates influence the risk of theft or vandalism, affecting the likelihood of property loss or damage in insurance claims. Insurers may adjust premiums based on the level of crime risk in the neighborhood where the insured property is located. What credit score A may be considered for some insurance types, it is less relevant for homeowners insurance. Factors such as age and gender B are not typically used for underwriting homeowners insurance, and square footage C primarily affects property value but is secondary to crime risk in premium calculations. Question 60. Scenario question. Topic: Policy provisions and endorsements. Scenario: MS. Lopez owns a jewelry store in Colorado Springs, Colorado, insured under a commercial property insurance policy. During a break-in, thieves steal valuable jewelry inventory from the store's display cases. MS. Lopez files a claim with her insurer. How will the insurer typically handle this claim under the commercial property insurance policy? A. By denying coverage due to theft exclusions. B. By paying for the actual cash value (SEV) of the stolen jewelry. C. By offering coverage for only partial theft losses. D. By paying for the replacement cost of the stolen jewelry. Answer: D. By paying for the replacement cost of the stolen jewelry. Explanation: under MS. Lopez's commercial property insurance policy in Colorado Springs, Colorado, the insurer will typically handle the claim by paying for the replacement cost of the stolen jewelry inventory. Commercial property insurance policies often include coverage for theft of business property, providing reimbursement for the cost to replace stolen items with new items of like kind and quality. Denying coverage due to theft exclusions would depend on specific policy terms, but standard policies typically cover theft losses. Paying for the actual cash value (SEV) B may deduct depreciation while offering coverage for partial theft losses. C is less common for comprehensive theft coverage. Question 61. Topic: Insurance claims. Under Colorado law, what is the purpose of subrogation in the insurance claims process? A. To deny coverage for fraudulent claims. B. To investigate and evaluate claims. C. To recover costs from responsible parties. D. To determine coverage limits. Answer: C. To recover costs from responsible parties. Explanation: in Colorado, subrogation in the insurance claims process serves the purpose of allowing insurers to recover costs from responsible parties after settling a claim with the insured. When an insurer pays a claim on behalf of the insured, it may pursue subrogation to seek reimbursement from third parties who may be legally liable for the loss or damages. Subrogation helps insurers recover funds expended in claims payments, promoting fairness and cost recovery in insurance operations. It does not involve denying coverage for fraudulent claims, investigating claims B, or determining coverage limits D, but rather focuses on recovering costs from parties at fault. Question 62. Topic: Policy interpretation. Which document typically outlines the insured's rights and obligations under an insurance policy in Colorado? A. Declarations page. B. Insurance application. C. Policy endorsements. D. Underwriting guidelines. Answer: A. Declarations page. Explanation: in Colorado, the declarations page typically outlines the insured's rights and obligations under an insurance policy. The declarations page summarizes key information about the policyholder, insured property or risks covered, policy limits, deductibles, and premium payments. It serves as a reference document for understanding the scope and terms of coverage provided by the insurance policy. While insurance applications B are used to gather initial information for underwriting, policy endorsements C modify or add to policy terms and underwriting guidelines. D assist insurers in risk assessment. The declarations page specifically details the insured's contractual rights and responsibilities. Question 63. Scenario question. Topic: Underwriting and risk assessment. Scenario: Mr. Patel applies for an automobile insurance policy in Boulder, Colorado. He has a history of multiple speeding tickets and one at-fault accident in the past year. How will these factors typically affect Mr. Patel's auto insurance premium under Colorado regulations? A. Increase the premium due to higher risk. B. Decrease the premium for safe driving history. C. Maintain the premium at standard rates. D. Deny coverage based on driving record. Answer: A. Increase the premium due to higher risk. Explanation: In Boulder, Colorado, Mr. Patel's history of multiple speeding tickets and one at-fault accident in the past year will typically increase his auto insurance premium due to higher perceived risk. Insurers in Colorado assess driver risk based on factors such as driving history, accident claims, and traffic violations, which impact the likelihood of future claims and insurance costs. These risk factors may lead insurers to adjust premiums upward to reflect the increased likelihood of claims based on Mr. Patel's driving record. Decreasing the premium. B. For safe driving or maintaining standard rates. C. Typically apply to drivers with favorable claims history or minimal risk factors, while denying coverage. D. Based solely on driving record is uncommon unless specific policy terms or legal requirements dictate otherwise. Question 64. Topic: Policy provisions and endorsements. Under Colorado insurance regulations, what is the purpose of an insurance policy endorsement? A. To cancel the insurance policy. B. To modify or add coverage terms. C. To investigate claims fraud. D. To determine policy exclusions. Answer: B. To modify or add coverage terms. Explanation: In Colorado, an insurance policy endorsement serves the purpose of modifying or adding coverage terms to the existing insurance policy. Endorsements allow insurers to tailor coverage to meet specific policyholder needs or address unique circumstances not originally covered by the standard policy provisions. They may add new coverages, change limits, clarified exclusions, or modify policy conditions based on insured requests or regulatory requirements. Endorsements do not typically involve canceling the policy. A. Investigating claims fraud. C. Or determining policy exclusions. D. But rather enhance or customize policy terms. Question 65. Topic: Workers' compensation insurance. What is a key objective of workers' compensation insurance under Colorado law? A. To provide financial support to employers. B. To protect employees from workplace injuries. C. To eliminate workplace safety regulations. D. To reduce employer liability for accidents. Answer: B. To protect employees from workplace injuries. Explanation: In Colorado, the key objective of workers' compensation insurance is to protect employees from workplace injuries and ensure they receive benefits for medical expenses, lost wages, and disability resulting from job-related accidents or illnesses. Workers' compensation laws mandate that employers provide insurance coverage to employees to compensate for work-related injuries or occupational diseases, regardless of fault. This insurance system aims to promote workplace safety, support injured workers, and prevent financial hardship for employees and their families. Providing financial support to employers. A. Eliminating workplace safety regulations. C. And reducing employer liability. D. Are not primary objectives of workers' compensation insurance but may be indirect outcomes of effective coverage. Question 66. Scenario question. Topic: Coverage and exclusions. Scenario: MS. Chen owns a vintage car insured under a classic car insurance policy in Fort Collins, Colorado. During a severe hailstorm, the car sustains extensive hail damage to its exterior and windows. MS. Chen files a claim with her insurer. How will the insurer typically handle this claim under the classic car insurance policy? A. By denying coverage due to weather exclusions. B. By paying for the actual cash value (CV) of the car. C. By requiring MS. Chen to pay a higher deductible. D. By paying for the agreed-upon value of the car. Answer: D. By paying for the agreed-upon value of the car. Explanation: Under MS. Chen's classic car insurance policy in Fort Collins, Colorado, the insurer will typically handle the claim by paying for the agreed-upon value of the car as stated in the policy. Classic car insurance policies often use agreed-upon value or stated value to insure vintage or collector vehicles, ensuring that owners like MS. Chen receive reimbursement for the car's appraised or agreed-upon value in the event of covered damage or loss. Denying coverage due to weather exclusions would depend on specific policy terms, but standard classic car policies typically cover hail damage. Paying for the actual cash value. A CVB may apply to standard auto insurance policies but is less common for classic cars with agreed-upon value coverage. Deductible requirements. C. Are standard but do not affect coverage terms for damage. Question 67. Topic: Insurance policy analysis. What is the purpose of policy exclusions in an insurance contract under Colorado law? A. To limit the insurer's liability for specific risks. B. To increase the insurance premium. C. To deny coverage for all claims. D. To determine policy limits. Answer A. To limit the insurer's liability for specific risks. Explanation. In Colorado, policy exclusions in an insurance contract serve the purpose of limiting the insurer's liability for specific risks that are not intended to be covered under the policy. Exclusions identify perils, events, or circumstances for which the insurer will not provide coverage, ensuring that the policy remains financially sustainable and aligned with the insured's risk exposure. By excluding certain risks, insurers mitigate potential losses and manage underwriting risks more effectively. Policy exclusions do not aim to increase the insurance premium. B. Deny coverage for all claims. C. Or determine policy limits. D. But rather define the scope and limitations of coverage offered by the insurance policy. Question 68. Topic: Coverage and exclusions. Under Colorado insurance regulations, what type of insurance policy typically covers medical expenses and lost wages for injured employees? A. General liability insurance. B. Commercial property insurance. C. Workers' compensation insurance. D. Professional liability insurance. Answer: C. Workers' compensation insurance. Explanation. In Colorado, workers' compensation insurance typically covers medical expenses and lost wages for injured employees who sustain work-related injuries or illnesses. This insurance provides financial benefits to employees for necessary medical treatment, rehabilitation costs, and partial wage replacement during periods of disability resulting from job-related incidents. Workers' compensation laws mandate employers to carry this insurance coverage to protect employees and ensure timely benefits for work-related injuries, regardless of fault. General liability insurance A. covers third-party bodily injury or property damage claims, while commercial property insurance B. protects against property loss or damage. Professional liability insurance D. covers errors or negligence in professional services, but it does not provide coverage for workplace injuries. Question 69. Scenario question. Topic: Casualty insurance. Scenario: MS. Adams operates a small bakery in Aurora, Colorado, insured under a business owner's policy BOP. During a busy weekend, a customer slips and falls on a wet floor, sustaining minor injuries. The customer files a liability claim against MS. Adams. How will the insurer typically handle this claim under the BOP? A. By denying coverage due to customer negligence. B. By paying for MS. Adams' legal defense costs. C. By offering coverage for medical expenses and legal fees. D. By requiring MS. Adams to pay a higher deductible. Answer: C. By offering coverage for medical expenses and legal fees. Explanation. Under MS. Adams business owner's policy BOP in Aurora, Colorado, the insurer will typically handle the liability claim by offering coverage for the customer's medical expenses and legal fees resulting from the slip and fall incident. BOP policies include general liability coverage that protects business owners against third-party bodily injury or property damage claims arising from business operations, premises, or products. Insurers provide financial protection for legal defense costs, settlements, or judgments associated with covered liability claims, ensuring business continuity and financial security for policyholders. Denying coverage due to customer negligence is unlikely under standard liability coverage unless specific policy exclusions apply. Paying for MS. Adams' legal defense costs B is a standard provision of BOP policies along with coverage for medical expenses and legal fees. C. Deductible requirements D may apply but do not determine coverage terms for liability claims. Question 70. Topic: Insurance claims. What is the purpose of the claims handling process in Colorado insurance regulations? A. To deny legitimate claims. B. To delay claim payments. C. To investigate claim fraud. D. To promptly settle valid claims. Answer: D. To promptly settle valid claims. Explanation. In Colorado, the purpose of the claims handling process in insurance regulations is to promptly settle valid claims submitted by policyholders. Insurers are required to conduct thorough investigations, evaluate claim documentation, and make fair claim decisions within reasonable time frames to ensure policyholder satisfaction and financial stability. Prompt claims settlement supports insureds by providing timely reimbursement for covered losses, including property damage, medical expenses, or liability claims. The claims handling process does not aim to deny legitimate claims, A, delay claim payments, B, or investigate claim fraud, C, as primary objectives, but rather focuses on efficient and equitable resolution of valid insurance claims. Question 71. Topic: Insurance industry trends and developments. Which emerging risk factor in Colorado's insurance industry is increasingly influencing underwriting considerations? A, declining property values. B, cybersecurity threats. C, low unemployment rates. D, minimal regulatory changes. Answer: B, cybersecurity threats. Explanation: in Colorado's insurance industry, cybersecurity threats are increasingly influencing underwriting considerations due to the rise in cyber incidents, data breaches, and privacy concerns affecting businesses and individuals. Insurers assess cyber risks to evaluate potential liabilities, financial impacts, and risk management strategies for policyholders exposed to cyber threats. Underwriting considerations include assessing cybersecurity measures, data protection protocols, and potential exposures to cyber-related losses to offer appropriate insurance coverage and risk mitigation solutions. Declining property values, A, low unemployment rates, C, and minimal regulatory changes, D, may influence economic factors but have less direct impact on underwriting decisions related to emerging cyber risks. Question 72. Scenario question. Topic: Underwriting considerations. Scenario: Mr. Garcia applies for homeowners insurance in Grand Junction, Colorado. His home is located in a high-risk flood zone known for seasonal flooding. How will this geographic factor typically affect Mr. Garcia's homeowners insurance premium? A, increase the premium due to higher flood risk. B, decrease the premium for low property values. C, maintain the premium at standard rates. D, deny coverage based on flood zone location. Answer: A, increase the premium due to higher flood risk. Explanation: in Grand Junction, Colorado, Mr. Garcia's homeowner's insurance premium will typically increase due to the higher flood risk associated with his home's location in a high-risk flood zone. Insurers assess geographic factors such as flood zone designations to determine property-specific risks and adjust premiums accordingly to reflect the increased likelihood of flood-related claims and property damage. Increasing the premium, A, aligns with underwriting practices to cover higher risk exposures and potential losses related to flood events. Decreasing the premium, B, for low property values, maintaining standard rates, C, or denying coverage, D, based solely on flood zone location, are less common under Colorado insurance regulations unless specific policy terms or regulatory requirements dictate otherwise. Question 73. Topic: Insurance contract formation. What essential elements must be present for a valid insurance contract under Colorado law? A, offer and acceptance, premium payment, and insurable interest. B, legal purpose, policy endorsements, and conditions. C, declarations page, underwriting guidelines, and representations. D, consideration, agent licensing, and consumer protection. Answer: A, offer and acceptance, premium payment, and insurable interest. Explanation: in Colorado, a valid insurance contract requires essential elements such as offer and acceptance, premium payment, and insurable interest. Offer and acceptance involve the mutual agreement between the insurer-offerer and the insured offeree regarding coverage terms and conditions. Premium payment signifies the insured's consideration for coverage, reflecting their financial commitment to the insurance contract. Insurable interest establishes the legal basis for insurance, ensuring that the insured has a financial stake in the covered property or person, mitigating against potential losses. Legal purpose, B, policy endorsements, B, and conditions, B, are components of insurance contracts but do not encompass the essential elements required for contract validity under Colorado law. Declarations page, C, underwriting guidelines, C, representations, C, consideration, D, agent licensing, D, and consumer protection, D, are relevant aspects but do not collectively constitute the primary essential elements of a valid insurance contract. Question 74. Topic: Ethics and professional conduct. What ethical responsibility do insurance agents in Colorado have towards clients under the principle of what most good faith are? A, to disclose all commission earnings. B, to prioritize insurer interests over client needs. C, to misrepresent policy terms to secure sales. D, to provide accurate and honest information. Answer: D. To provide accurate and honest information. Explanation: in Colorado, insurance agents have an ethical responsibility under the principle of utmost good faith to provide accurate and honest information to clients regarding insurance policies, coverage options, and contractual terms. Upholding utmost good faith requires agents to act with integrity, transparency, and professionalism in their interactions with clients, ensuring that all information provided is truthful and relevant to client needs. Disclosing commission earnings. A. Prioritizing insurer interests over client needs. B. And misrepresenting policy terms. C. Violate ethical standards and consumer protection laws, undermining trust and fair practices in the insurance industry. Question 75. Scenario question. Topic: Policy interpretation and analysis. Scenario: Mr. Thompson purchases a homeowner's insurance policy in Denver, Colorado, covering his primary residence. A wildfire damages his property, causing significant structural and personal property losses. How will the insurer typically handle this claim under the homeowner's insurance policy? A. By denying coverage due to wildfire exclusions. B. By paying for the replacement cost of damaged property. C. By requiring Mr. Thompson to pay additional deductibles. D. By covering only partial losses under policy limits. Answer: B. By paying for the replacement cost of damaged property. Explanation: under Mr. Thompson's homeowner's insurance policy in Denver, Colorado, the insurer will typically handle the claim by paying for the replacement cost of damaged property caused by the wildfire. Homeowners' insurance policies commonly cover fire damage, including losses to the dwelling structure and personal belongings based on the replacement cost to repair or replace damaged items with new materials or items of similar kind and quality. Denying coverage due to wildfire exclusions would depend on specific policy terms, but is less likely for standard homeowners insurance policies covering fire perils, requiring additional deductibles. C. May apply based on policy provisions, but coverage for replacement cost. B. Is a standard practice to restore the insured property to its pre-loss condition. Coverage for only partial losses. D. May be limited by policy terms or coverage limits, but does not negate the insurer's obligation to provide full replacement cost coverage for covered perils like wildfires. Question 76. Topic: Underwriting principles. What is the primary objective of risk assessment in insurance underwriting? A. To deny coverage to high-risk applicants. B. To determine policy premium rates. C. To evaluate applicant insurability. D. To limit coverage to low-risk applicants. Answer: C. To evaluate applicant insurability. Explanation: in insurance underwriting, the primary objective of risk assessment is to evaluate applicant insurability by assessing factors such as health status, lifestyle, occupation, and financial stability. Insurers analyze these risk factors to determine the likelihood of claims and financial losses associated with providing coverage to individual applicants. Evaluating insurability. C. Helps insurers make informed decisions about policy issuance, coverage terms, and premium rates tailored to applicant risk profiles. Denying coverage to high-risk applicants or limiting coverage. D. To low-risk applicants based solely on risk assessment is not the primary objective, but may influence underwriting decisions. Determining policy premium rates. B. Involves pricing coverage based on risk assessment outcomes and underwriting guidelines, but it is not the primary objective of risk assessment. Question 77. Topic: Casualty insurance. Under Colorado law, what does liability insurance typically cover for policyholders? A. Property damage caused by the insured. B. Personal injuries sustained by the insured. C. Legal defense costs in a liability lawsuit. D. Theft of insured property. Answer: C. Legal defense costs in a liability lawsuit. Explanation: in Colorado, liability insurance typically covers legal defense costs incurred by policyholders in defending against liability claims or lawsuits alleging bodily injury or property damage caused by the insured. Liability coverage includes expenses associated with legal representation, court fees, settlements, and judgments arising from covered incidents. Insurers defend policyholders against liability claims, ensuring financial protection and legal support throughout the litigation process. Property damage caused by the insured. A. Personal injuries sustained by the insured. B. And theft of insured property. D. Are not primary coverages provided under liability insurance policies, but may be covered under other types of insurance, such as property or personal lines coverage. Question 78. Scenario question. Topic: Coverage and exclusions. Scenario: MS. Rodriguez owns a small business in Colorado Springs insured under a commercial property insurance policy. A severe thunderstorm causes extensive roof damage to her business premises. How will the insurer typically handle this claim under the commercial property insurance policy? A. By denying coverage due to storm exclusions. B. By paying for the actual cash value, a CV of roof repairs. C. By requiring MS Rodriguez to relocate her business. D. By paying for the replacement cost of roof repairs. Answer: D. By paying for the replacement cost of roof repairs. Explanation: Under MS Rodriguez's commercial property insurance policy in Colorado Springs, the insurer will typically handle the claim by paying for the replacement cost of roof repairs damaged by the severe thunderstorm. Commercial property insurance policies commonly cover damage to buildings and business assets caused by specified perils, including storms, based on the replacement cost to repair or replace damaged property with new materials or equivalent value. Denying coverage due to storm exclusions may depend on specific policy terms, but standard commercial property policies cover storm-related damages. Paying for the actual cash value, a CVB of roof repairs, may apply in some policies, but is less common than replacement cost coverage for building repairs. Requiring MS Rodriguez to relocate her business. C. Is not typically a claims resolution under property insurance policies unless necessary due to extensive damage or safety concerns. Question 79. Topic: Insurance policy analysis. What role does the declarations page serve in an insurance policy under Colorado law? A. It outlines the insured's duties after a loss. B. It specifies the coverage limits and deductibles. C. It cancels the insurance policy upon issuance. D. It investigates fraudulent claims. Answer: B. It specifies the coverage limits and deductibles. Explanation: In Colorado, the declarations page in an insurance policy serves the role of specifying key details such as coverage limits, deductibles, insured property or individuals, policyholder information, and effective dates. It provides a summary of the policy's essential terms and conditions, helping policyholders understand their coverage scope and financial responsibilities under the insurance contract. Specifying coverage limits and deductibles. B. On the declarations page ensures clarity and transparency regarding the extent of insurance protection provided. Outlining insured duties after a loss. A. Cancelling the insurance policy. C. And investigating fraudulent claims. D. Are not primary functions of the declarations page but may be addressed in other sections of the insurance policy, such as conditions and endorsements. Question 80. Topic: State insurance laws and regulations. Under Colorado state regulations, what is a primary responsibility of insurance producers, agents regarding consumer protection? A. To charge excessive premiums for policies. B. To ensure policyholders understand coverage terms. C. To deny claims based on policy exclusions. D. To avoid disclosing commission earnings. Answer: B. To ensure policyholders understand coverage terms. Explanation: In Colorado, insurance producers, agents have a primary responsibility to ensure that policyholders understand coverage terms, policy conditions, exclusions, and limitations before purchasing insurance policies. Agents must provide accurate information, explain policy features, and address client questions or concerns to promote consumer awareness and informed decision-making. Ensuring policyholders understand coverage terms. B. Helps mitigate misunderstandings, dissatisfaction, and disputes related to claim denials or inadequate coverage. Charging excessive premiums. A. Denying claims. C. Based on policy exclusions or avoiding disclosure of commission earnings. D. Violate consumer protection laws and ethical standards in the insurance industry. Question 81. Scenario question. Topic: Workers' compensation insurance. Scenario: Mr. Lee operates a construction business in Boulder, Colorado with several employees. One of his workers suffers a severe injury while operating heavy machinery at a construction site. How will Mr. Lee's workers' compensation insurance typically handle this claim? A. By denying coverage due to employee negligence. B. By providing medical benefits and lost wages. C. By transferring liability to equipment manufacturers. D. By requiring Mr. Lee to pay higher premiums. Answer: B. By providing medical benefits and lost wages. Explanation: Under Mr. Lee's workers' compensation insurance in Boulder, Colorado, the insurer will typically handle the claim by providing medical benefits and lost wages to the injured worker. Workers' compensation insurance covers medical expenses, rehabilitation costs, and partial wage replacement for employees injured or disabled in the course of employment, regardless of fault or negligence. Providing medical benefits and lost wages. B. Supports injured workers' recovery and financial stability, ensuring compliance with state-mandated insurance requirements and employer responsibilities. Denying coverage. A. Based on employee negligence is uncommon under workers' compensation laws, which prioritize injured worker benefits. Transferring liability. C. To equipment manufacturers or requiring higher premiums. D. For employers may involve separate liability or risk management strategies but are not primary claims resolutions under workers' compensation insurance. Question 82. Topic: Insurance claims. Under Colorado insurance regulations, what is the purpose of subrogation in the claims handling process? A. To transfer claim responsibilities to third-party insurers. B. To deny coverage for certain types of claims. C. To investigate fraudulent claims. D. To recover claim payments from responsible parties. Answer: D. To recover claim payments from responsible parties. Explanation: in Colorado, subrogation in the claims handling process serves the purpose of enabling insurers to recover claim payments from responsible third parties or entities legally liable for causing the insured loss or damages. Insurers exercise subrogation rights to pursue reimbursement for claim payments made to policyholders, effectively reducing financial losses and promoting equitable distribution of liability among responsible parties. Recovering claim payments from responsible parties. D. Through subrogation supports insurers in maintaining financial stability, managing risk exposure, and ensuring fair allocation of costs associated with covered losses. Transferring claim responsibilities. A. To third-party insurers. Denying coverage. B. For specific claims and investigating fraudulent claims. C. Are distinct processes unrelated to the primary objective of subrogation in claims handling. Question 83. Topic: Insurance industry trends and developments. What impact does technological innovation have on the insurance industry in Colorado? A. Decreases operational efficiency and customer service. B. Reduces risks associated with emerging perils. C. Enhances underwriting accuracy and data analysis. D. Limits accessibility to insurance products. Answer: C. Enhances underwriting accuracy and data analysis. Explanation: in Colorado, technological innovation in the insurance industry enhances underwriting accuracy and data analysis by enabling insurers to leverage advanced analytics, artificial intelligence, AI, and data-driven insights to assess risks more effectively. Technology facilitates real-time data collection, risk assessment modeling, and predictive analytics to improve underwriting decisions, pricing accuracy, and policyholder segmentation. Enhancing underwriting accuracy and data analysis. C. Supports insurers in better managing risk exposures, optimizing pricing strategies, and offering tailored insurance products to meet consumer needs. Technological innovation does not typically decrease operational efficiency and customer service. A. Reduce risks associated with emerging perils. B. Or limit accessibility to insurance products. D. But rather expands capabilities and improves industry competitiveness through digital transformation. Question 84. Topic: Policy provisions and endorsements. Scenario: MS. Parker purchases an auto insurance policy in Fort Collins, Colorado with comprehensive coverage. Her vehicle is vandalized in a parking lot, resulting in significant damage to the exterior. How will MS. Parker's auto insurance policy typically handle this claim? A. By denying coverage due to vandalism exclusions. B. By paying for the actual cash value of repairs. C. By offering coverage for replacement cost of repairs. D. By requiring MS. Parker to file a police report. Answer: C. By offering coverage for replacement cost of repairs. Explanation: under MS. Parker's auto insurance policy in Fort Collins, Colorado with comprehensive coverage, the insurer will typically handle the claim by offering coverage for the replacement cost of repairs to her vehicle damaged by vandalism. Comprehensive coverage typically includes protection against non-collision incidents, such as vandalism, based on the replacement cost to repair or replace damaged vehicle components with new materials or parts of similar kind and quality. denying coverage. Due to vandalism, exclusions may apply in some cases based on policy terms, but standard comprehensive coverage addresses vandalism losses. Paying for the actual cash value, a CVB of repairs may be an alternative claims resolution method but does not reflect replacement cost coverage provided under comprehensive policies, requiring MS. Parker to file a police report. D is a standard procedure for documenting vandalism incidents but does not affect coverage determination under her auto insurance policy. Question 85. Topic: Policy provisions and endorsements. What role do insurance endorsements play in modifying insurance policies under Colorado law? A. They cancel existing policies. B. They provide additional coverage options. C. They deny coverage for specific perils. D. They exclude policyholders from claims. Answer: B. They provide additional coverage options. Explanation: in Colorado, insurance endorsements play a crucial role in modifying insurance policies by providing additional coverage options or altering existing policy terms to better meet the insured's needs. Endorsements allow insurers to customize coverage by adding specific protections, adjusting coverage limits, or clarifying policy conditions based on individual circumstances or preferences. Providing additional coverage options, B, through endorsements enhances policy flexibility and tailors insurance protections to address unique risks or changes in coverage requirements. Endorsements do not typically cancel existing policies. They deny coverage for specific perils, C, or exclude policyholders from claims, D, but rather expand coverage scope or modify policy terms within regulatory guidelines. Question 86. Topic: Insurance contracts. Under Colorado law, what constitutes an insurance contract to offer in the formation process? A. Policyholder's premium payment. B. Insurer's coverage terms proposal. C. Agent's representation of policy benefits. D. Insured's acceptance of policy conditions. Answer: B. Insurer's coverage terms proposal. Explanation: in Colorado, an insurance contract offer in the formation process typically consists of the insurer's proposal of coverage terms and conditions to the prospective policyholder. The insurer initiates the offer by presenting specific coverage options, policy terms, premium rates, and contractual obligations to the insured. The offer outlines the insurer's willingness to enter into a contractual agreement based on the terms proposed. Policyholder's premium payment, A, and insured's acceptance of policy conditions, D, constitute elements of contract formation but are subsequent steps following the insurer's initial offer. Agent's representation of policy benefits, C, may facilitate policy negotiations but does not constitute the insurer's formal offer in the contract formation process. Question 87. Scenario question. Topic: Casualty insurance. Scenario: MS. Evans operates a small retail store in Aurora, Colorado. A customer slips and falls on a wet floor, resulting in injuries requiring medical treatment. How will MS. Evans Commercial General Liability (CGL) insurance typically handle this claim? A. By denying coverage due to customer negligence. B. By paying for the customer's medical expenses. C. By excluding slip and fall incidents from coverage. D. By requiring MS. Evans to file a police report. Answer: B. By paying for the customer's medical expenses. Explanation: under MS. Evans Commercial General Liability (CGL) insurance in Aurora, Colorado, the insurer will typically handle the claim by paying for the customer's medical expenses resulting from slip and fall injuries at her retail store. CGL insurance covers bodily injury and property damage liability claims arising from business operations, including accidents involving customers on the premises. Paying for the customer's medical expenses, B, aligns with CGL policy provisions to provide financial protection and liability coverage for injuries sustained by third parties due to covered incidents. Denying coverage, A, based on customer negligence is unlikely under standard CGL policies, which focus on liability protection for business owners. Excluding slip and fall incidents, C, from coverage may vary by policy terms but does not negate coverage for bodily injury claims. Filing a police report, D, is not typically required for handling liability claims under CGL insurance unless legally mandated or necessary for claims documentation. Question 88. Topic: Underwriting considerations. What factors do insurers typically consider during the underwriting process for homeowners insurance in Colorado? Applicants' credit history and payment habits. B. Homes' proximity to fire hydrants and fire stations. C. Neighborhood crime rates and security measures. D. Previous insurance claims history and deductibles. Answer: B. Homes' proximity to fire hydrants and fire stations. Explanation: in Colorado, insurers typically consider factors such as the home's proximity to fire hydrants and fire stations during the underwriting process for homeowners insurance. These factors influence the property's vulnerability to fire hazards and the insurer's risk assessment for providing coverage. Proximity to fire hydrants and fire stations. B. Enhances emergency response capabilities and reduces potential fire-related losses affecting premium rates and coverage terms. Applicants' credit history and payment habits. A. Neighborhood crime rates and security measures. C. And previous insurance claims, history and deductibles. D. Are also relevant underwriting considerations but focus on different aspects of risk assessment and policy pricing in homeowners insurance. Question 89. Topic: Loss settlement methods. What is the primary difference between replacement cost and actual cash value (SCV) in property insurance claims under Colorado law? A. Replacement cost includes depreciation, while a CV does not. B. A CV provides coverage for personal property only. C. Replacement cost applies to commercial properties only. D. A CV requires policyholder to pay additional premiums. Answer: A replacement cost includes depreciation, while a CV does not. Explanation: in Colorado, the primary difference between replacement cost and actual cash value (SCV) in property insurance claims is that replacement cost includes depreciation of property value over time, while ACV does not account for depreciation. Replacement cost coverage reimburses policyholders for the full cost of replacing damaged or destroyed property with new items of similar kind and quality without subtracting depreciation. ACV, on the other hand, provides reimbursement based on the property's current market value, considering depreciation since the item was purchased. Replacement cost and ACV are applicable to both residential and commercial properties, depending on policy terms and coverage options offered by insurers. Paying additional premiums, D, may relate to optional coverage enhancements but is not a defining characteristic of ACV or replacement cost settlement methods. Question 90. Scenario question. Topic: Coverage and exclusions. Scenario: Mr. Nguyen purchases an umbrella insurance policy in Lakewood, Colorado, to supplement his existing auto and homeowners insurance coverage. His teenage son, driving the family car, causes a multi-vehicle accident resulting in significant property damage and injuries to several individuals. How will Mr. Nguyen's umbrella insurance policy typically handle this claim? A. By denying coverage due to underage driver exclusions. B. By providing excess liability coverage beyond primary policies. C. By requiring Mr. Nguyen to pay higher deductibles. D. By excluding coverage for property damage claims. Answer: B. By providing excess liability coverage beyond primary policies. Explanation: under Mr. Nguyen's umbrella insurance policy in Lakewood, Colorado, the insurer will typically handle the claim by providing excess liability coverage beyond the primary limits of his auto and homeowners insurance policies. Umbrella insurance extends liability protection for claims exceeding underlying policy limits, including bodily injury and property damage liabilities resulting from covered incidents. Providing excess liability coverage, B, ensures comprehensive financial protection for policyholders facing costly liability claims such as multi-vehicle accidents involving significant damages and injuries. Denying coverage, A, due to underage driver exclusions is uncommon under umbrella policies focused on liability protection. Requiring higher deductibles, C, or excluding coverage for property damage claims, D, may vary by policy terms but do not negate the primary function of umbrella insurance in extending liability coverage. Question 91. Topic: Policy interpretation and analysis. What is the purpose of exclusions in insurance policies under Colorado law? A, to limit coverage for specific risks. B, to increase policy premiums. C, to deny claims for any reason. D, to extend coverage to all perils. Answer: A, to limit coverage for specific risks. Explanation: in Colorado, exclusions in insurance policies serve the purpose of limiting coverage for specific risks or perils that insurers deem too costly or unpredictable to underwrite. Exclusions specify circumstances, events, or types of damage that are not covered by the insurance policy, By defining the scope and limitations of coverage provided. Limiting coverage for specific risks. It helps insurers manage risk exposure, set appropriate premium rates, and maintain financial stability while offering tailored insurance protections to policyholders. Exclusions do not typically aim to increase policy premiums. B. Deny claims for any reason. C. Or extend coverage to all perils. D. But rather establish clear boundaries for covered and excluded losses under contractual terms. Question 92. Topic: Ethics and professional conduct. What ethical responsibility do insurance agents have regarding client information under Colorado regulations? A. To disclose client information without consent. B. To use client information for personal gain. C. To safeguard client confidentiality and privacy. D. To share client information with competitors. Answer: C. To safeguard client confidentiality and privacy. Explanation: under Colorado regulations, insurance agents have an ethical responsibility to safeguard client confidentiality and privacy by maintaining the confidentiality of client information obtained during the course of business interactions. Agents must protect sensitive client data from unauthorized access, use, or disclosure, ensuring compliance with privacy laws and ethical standards in the insurance industry. Safeguarding client confidentiality and privacy. C. Promotes trust, maintains professional integrity, and protects client interests in insurance transactions. Disclosing client information without consent. A. Using client information for personal gain. B. Or sharing client information with competitors. D. Violates ethical guidelines and regulatory requirements, potentially resulting in legal and disciplinary actions. Question 93. Scenario question. Topic: Workers' compensation insurance. Scenario: Ms. Roberts owns a landscaping company in Denver, Colorado with several employees. One of her workers suffers a disabling injury while operating heavy machinery at a client's property. How will Ms. Roberts' workers' compensation insurance typically handle this claim? A. By denying coverage due to employee negligence. B. By reimbursing medical expenses and lost wages. C. By excluding coverage for hazardous occupations. D. By requiring Ms. Roberts to pay higher premiums. Answer: B. By reimbursing medical expenses and lost wages. Explanation: under Ms. Roberts' workers' compensation insurance in Denver, Colorado, the insurer will typically handle the claim by reimbursing medical expenses and lost wages to the injured worker. Workers' compensation insurance covers medical treatment, rehabilitation costs, and wage replacement for employees injured or disabled in the course of employment, regardless of fault or negligence. Reimbursing medical expenses and lost wages. B. Supports injured workers' recovery and financial stability, ensuring compliance with state-mandated insurance requirements and employer responsibilities. Denying coverage due to employee negligence is uncommon under workers' compensation laws that prioritize employee benefits and liability coverage. Excluding coverage for hazardous occupations. C. May vary by policy terms but does not negate general coverage for work-related injuries. Requiring Ms. Roberts to pay higher premiums. D. May relate to overall risk management strategies but does not affect claims resolution under workers' compensation insurance. Question 94. Topic: State insurance laws and regulations. What is the purpose of state-specific insurance regulations and statutes in Colorado? A. To limit consumer access to insurance products. B. To standardize insurance policy language nationwide. C. To protect consumers and ensure fair insurance practices. D. To increase insurance premiums for policyholders. Answer: C. To protect consumers and ensure fair insurance practices. Explanation: in Colorado, state-specific insurance regulations and statutes serve the purpose of protecting consumers and promoting fair insurance practices within the state's insurance marketplace. Regulations establish standards for insurance company conduct, policy terms, pricing practices, claims handling procedures, and consumer rights protections. Protecting consumers and ensuring fair insurance practices. C. Enhances transparency, accountability, and accessibility to insurance products while safeguarding consumer interests against unfair treatment or practices. State regulations do not aim to limit consumer access to insurance products. A. Standardize insurance policy language nationwide. B. Or increase insurance premiums for policyholders. D. But rather foster competitive, stable insurance markets that benefit both insurers and consumers. Question 95. Topic: Casualty insurance. What legal concept governs liability insurance coverage for bodily injury or property damage claims under Colorado law? A. Proximate cause. B. Comparative negligence. C. Indemnity principle. D. Duty to defend. Answer A. Proximate cause. Explanation. Under Colorado law, liability insurance coverage for bodily injury or property damage claims is governed by the legal concept of proximate cause. Proximate cause determines whether an insured event, such as an accident resulting in injury or property damage, is sufficiently related to the insured's liability exposure under the insurance policy. Insurers analyze proximate cause to determine coverage eligibility, liability extent, and claims settlements based on the directness and foreseeability of the insured peril's consequences. Understanding proximate cause is critical for insurers and policyholders in evaluating coverage scope, legal liability, and claims resolution under liability insurance policies. Comparative negligence. B. Indemnity principle. C. And duty to defend. D. Are legal principles and insurance contract provisions that may apply to liability insurance claims but do not define the primary basis for coverage determination under Colorado law. Question 96. Scenario question. Topic: Underwriting considerations. Scenario: Mr. Patel applies for a commercial property insurance policy in Colorado Springs, Colorado for his newly purchased warehouse facility. The property has a history of prior structural damage due to natural disasters. How might insurers evaluate this risk during the underwriting process? A. By denying coverage due to pre-existing damage. B. By charging higher premiums for enhanced coverage. C. By excluding coverage for natural disaster perils. D. By limiting coverage to specific building components. Answer: B. By charging higher premiums for enhanced coverage. Explanation: In Colorado Springs, Colorado, insurers evaluating a commercial property insurance application for a warehouse facility with prior structural damage due to natural disasters may adjust underwriting decisions by charging higher premiums for enhanced coverage. Insurers assess property risks based on factors such as building condition, location, vulnerability, past claims history, and mitigation measures to determine appropriate premium rates and coverage terms. Charging higher premiums for enhanced coverage. B. Reflects insurers' risk assessment strategies to manage potential loss exposures associated with prior structural damage while providing comprehensive insurance protections tailored to specific risks. Denying coverage. A. Due to pre-existing damage is uncommon under commercial property insurance policies, which focus on risk management and premium pricing adjustments. Excluding coverage for natural disaster perils. C. Or limiting coverage to specific building components. D. May be considered based on policy terms and risk underwriting criteria, but do not negate overall coverage availability for commercial property risks. Question 97. Topic: Insurance policy analysis. What role does the declarations page play in an insurance policy under Colorado law? A. It provides a summary of policy benefits and coverage limits. B. It lists exclusions and limitations applicable to the policy. C. It serves as a legal contract binding the insurer and insured. D. It outlines procedures for filing insurance claims. Answer A. It provides a summary of policy benefits and coverage limits. Explanation: In Colorado, the declarations page in an insurance policy plays a crucial role by providing a summary of policy benefits, coverage limits, insured parties, and specific policy details. The declarations page serves as a key reference document for policyholders to understand the scope of insurance coverage, including policy limits, deductibles, premium payments, and additional endorsements. It does not serve as a legal contract itself, but complements the insurance contract by outlining policy specifics and facilitating policyholder understanding, listing exclusions and limitations. B. Applicable to the policy and outlining procedures for filing claims. D. Are typically included in the policy's terms and conditions sections rather than the declarations page. Question 98. Topic: Loss settlement methods. Under Colorado law, what is the purpose of depreciation in property insurance claims? A. To discourage policyholders from filing claims. B. To calculate the actual cash value, SCV, of property. C. To increase insurance premiums over time. D. To deny coverage for older properties. Answer: B. To calculate the actual cash value, SCV, of property. Explanation: In Colorado, depreciation in property insurance claims serves the purpose of calculating the actual cash value (SCV) of damaged or destroyed property based on its age, condition, and market value at the time of loss. Depreciation reflects the reduction in property value over time due to wear and tear, obsolescence, or aging factors influencing ACV determination for claims settlement purposes. Calculating the actual cash value (SCV) B provides insurers and policyholders with a fair assessment of property worth at the time of loss, considering depreciation adjustments. Depreciation does not aim to discourage claims that increase insurance premiums, C, or deny coverage for older properties, D, but rather supports equitable claims settlements and accurate valuation under property insurance policies. Question 99. Scenario question topic coverage and exclusions. Scenario MS. Gomez purchases a homeowner's insurance policy in Boulder, Colorado with coverage for her primary residence. During a severe thunderstorm, a tree falls on her roof, causing extensive damage. How will MS? Gomez's homeowner's insurance policy typically handle this claim: A. By denying coverage due to tree-related exclusions. B. By reimbursing repair costs up to policy limits. C. By requiring MS. Gomez to relocate temporarily. D. By excluding coverage for storm-related claims. Answer: B. By reimbursing repair costs up to policy limits. Explanation: under MS. Gomez's homeowner's insurance policy in Boulder, Colorado, the insurer will typically handle the claim by reimbursing repair costs up to policy limits for damage caused by a fallen tree during a severe thunderstorm. Homeowners insurance covers structural damage to the dwelling caused by specified perils, including falling objects like trees, subject to policy terms and conditions. Reimbursing repair costs. B. Facilitates property restoration and recovery from covered losses, ensuring MS. Gomez receives financial compensation for repair expenses within policy limits. Denying coverage due to tree-related exclusions may apply based on policy provisions, but standard policies include coverage for specified perils like falling trees, requiring MS. Gomez to relocate temporarily. C. Or excluding coverage for storm-related claims. D. Are not typical policy responses but may vary by specific policy terms and claims assessment. Question 100. Topic: Insurance claims. What is the significance of subrogation in property and casualty insurance claims under Colorado law? A. It allows policyholders to file multiple claims for the same loss. B. It transfers the insured's right to recover damages to the insurer. C. It requires insurers to settle claims within a specific time frame. D. It restricts coverage for certain high-risk perils. Answer: B. It transfers the insured's right to recover damages to the insurer. Explanation: in Colorado, subrogation in property and casualty insurance claims transfers the insured's right to recover damages or seek compensation for losses to the insurer after the insurer has paid a claim on behalf of the insured. Subrogation B enables insurers to pursue legal action or recover costs from responsible third parties, such as negligent parties or entities responsible for causing insured losses. By transferring recovery rights to the insurer, subrogation helps prevent double recovery for the same loss and supports insurer efforts to mitigate loss exposures through claims recoveries. Subrogation does not allow policyholders to file multiple claims for the same loss, impose specific claims settlement time frames, C, or restrict coverage for high-risk perils, D, but rather enhances insurer recovery mechanisms and loss management strategies in property and casualty insurance operations. Question 101. Topic: Ethics and professional conduct. What ethical obligations do insurance agents have regarding conflict of interest situations under Colorado regulations? A. To prioritize insurer interests over policyholder interests. B. To disclose potential conflicts of interest to clients. C. To conceal personal relationships with clients. D. To charge higher premiums for conflicted policies. Answer: B. To disclose potential conflicts of interest to clients. Explanation: under Colorado regulations, insurance agents have ethical obligations to disclose potential conflicts of interest to clients, ensuring transparency and informed decision-making in insurance transactions. Conflicts of interest may arise when an agent's personal interests or relationships influence their professional recommendations or actions, potentially impacting client outcomes or insurance choices. Disclosing potential conflicts of interest. B. Enables clients to assess the impartiality of agent advice, understand potential influences, and make informed decisions aligned with their best interests. Ethical obligations do not prioritize insurer interests over policyholder interests. They conceal personal relationships. C. Or impose higher premiums for conflicted policies. D. But rather promote integrity, trust, and client-focused service in insurance agent-client relationships. Question 102. Scenario question. Topic: Workers' compensation insurance. Scenario: Mr. Thompson owns a construction company in Fort Collins, Colorado. One of his employees suffers a severe injury on a job site due to a workplace accident involving faulty equipment. How will Mr. Thompson's workers' compensation insurance typically handle this claim? A. By denying coverage due to employer negligence. B. By reimbursing medical expenses and lost wages. C. By excluding coverage for construction-related injuries. D. By requiring Mr. Thompson to terminate the injured employee. Answer: B. By reimbursing medical expenses and lost wages. Explanation: Under Mr. Thompson's workers' compensation insurance in Fort Collins, Colorado, the insurer will typically handle the claim by reimbursing medical expenses and lost wages for the injured employee involved in a workplace accident. Workers' compensation insurance provides statutory benefits, including medical treatment, wage replacement, and rehabilitation services, to employees injured or disabled in the course of employment, regardless of fault or negligence. Reimbursing medical expenses and lost wages. B. Supports injured workers' recovery and financial stability while fulfilling employer obligations under state-mandated insurance requirements. Denying coverage. A. Due to employer negligence is uncommon under workers' compensation laws that prioritize employee benefits and liability coverage. Excluding coverage for construction-related injuries. C. Or requiring termination of injured employees. D. Are not typical responses but may vary based on policy terms and claims assessment. Question 103. Topic: Underwriting considerations. What factors do insurers typically consider when assessing risk for homeowners insurance policies in Colorado? A. Policyholder age and marital status. B. Property location and construction materials. C. Vehicle make and model. D. Personal credit score. Answer: B. Property location and construction materials. Explanation: In Colorado, insurers assess risk factors for homeowners insurance policies based on property-specific characteristics, including location and construction materials used. Property location, such as proximity to flood zones, wildfire-prone areas, or crime rates, and construction materials, such as wood, brick, or steel, influence property vulnerability to perils and insurance risk exposure. Insurers consider these factors. B. To determine premium rates, coverage limits, and underwriting decisions aligned with property risk assessments. Policyholder age and marital status. A. Vehicle make and model. C. And personal credit score. D. Are relevant to other types of insurance underwriting but do not primarily impact homeowners insurance risk assessments under Colorado regulations. Question 104. Topic: Policy provisions and endorsements. What is the purpose of an insurance policy endorsement under Colorado law? A. To invalidate the original insurance contract. B. To extend or modify coverage terms. C. To increase policy deductibles. D. To delay claims processing. Answer: B. To extend or modify coverage terms. Explanation: In Colorado, an insurance policy endorsement serves the purpose of extending or modifying coverage terms beyond the original insurance contract provisions. Endorsements. B. Allow insurers and policyholders to customize insurance coverage by adding, deleting, or altering policy terms, conditions, or limits to meet specific insurance needs or circumstances. By incorporating endorsements, insurers can offer tailored insurance protections, address unique risks, and adapt coverage to policyholder preferences or changing circumstances without invalidating the original insurance contract. A. Increasing deductibles. C. Or delaying claims processing. D. Question 105. Scenario question. Topic: Coverage and exclusions. Scenario: MS. Lopez owns a retail store in Aurora, Colorado, covered under a commercial property insurance policy. During a break-in, thieves steal valuable merchandise, causing significant financial loss. How will MS. Lopez's commercial property insurance policy typically handle this claim? A. By denying coverage due to theft exclusions. B. By reimbursing the retail value of stolen merchandise. C. By excluding coverage for business-related losses. D. By requiring Ms. Lopez to relocate her business. Answer: B. By reimbursing the retail value of stolen merchandise. Explanation: under Ms. Lopez's commercial property insurance policy in Aurora, Colorado, the insurer will typically handle the claim by reimbursing the retail value of stolen merchandise lost during a break-in. Commercial property insurance covers financial losses resulting from covered perils, including theft, vandalism, or burglary, subject to policy terms and conditions. Reimbursing the retail value of stolen merchandise. B. Supports business continuity and recovery from covered losses, ensuring Ms. Lopez receives compensation for stolen inventory or property damage within policy limits. Denying coverage. A. Due to theft, exclusions may apply based on policy provisions, but standard policies include coverage for specified perils like theft. Excluding coverage for business-related losses. C. Or requiring Ms. Lopez to relocate her business. D. Are not typical policy responses, but may vary based on specific policy terms and claims assessment. Question 106. Topic: Insurance contract formation. What essential elements are required for the formation of a valid insurance contract under Colorado law? A. Offer acceptance and policy delivery. B. Consideration, binder agreement, and premium payment. C. Agent representation, warranty, and endorsement. D. Declarations page, underwriting, and claims processing. Answer: A. Offer acceptance and policy delivery. Explanation: in Colorado, the essential elements required for the formation of a valid insurance contract include offer, acceptance, and policy delivery. These elements establish mutual agreement between the insurer and the policyholder regarding coverage terms, conditions, and obligations under the insurance contract. Offer refers to the insurer's proposal or terms of insurance coverage. Acceptance signifies the policyholder's agreement to those terms, and policy delivery finalizes the contractual relationship. Consideration: B. Involves the exchange of value, such as premium payment, but is not a fundamental element of contract formation. Agent representation and warranty. C. And declarations page, underwriting, and claims processing. D. Are components or processes related to insurance contracts but do not constitute essential elements for contract formation under Colorado law. Question 107. Topic: Valuation of property. How do insurers typically determine replacement cost coverage for property insurance policies in Colorado? A. By estimating the market value of the property. B. By accounting for depreciation and wear and tear. C. By calculating the actual cash value (SEV) of the property. D. By assessing the cost to rebuild or repair the property. Answer: D. By assessing the cost to rebuild or repair the property. Explanation: in Colorado, insurers determine replacement cost coverage for property insurance policies by assessing the cost to rebuild or repair the property to its pre-loss condition, considering current construction costs, materials, and labor expenses. Replacement cost coverage (D) provides policyholders with financial protection to cover the expenses of rebuilding or repairing damaged property without deductions for depreciation, ensuring comprehensive property restoration following covered losses. Estimating market value. A. Reflects property worth in the real estate market, while accounting for depreciation. B. Calculates the actual cash value (SEV) based on property age and condition, which may differ from replacement cost. Insurers use replacement cost methods to support accurate property valuation and coverage adequacy under property insurance policies. Question 108. Scenario question. Topic: Coverage and exclusions. Scenario: Mr. Garcia owns a fleet of commercial trucks used for delivery services in Denver, Colorado. One of his trucks is involved in a collision with another vehicle, resulting in significant property damage and bodily injuries to the occupants. How will Mr. Garcia's commercial auto insurance policy typically handle this claim? A. By denying coverage due to vehicle age. B. By reimbursing repair costs and medical expenses. C. By excluding coverage for collision-related claims. D. By increasing premiums for future coverage. Answer: B. By reimbursing repair costs and medical expenses. Explanation: under Mr. Garcia's commercial auto insurance policy in Denver, Colorado, the insurer will typically handle the claim by reimbursing repair costs for property damage to the vehicles involved and medical expenses for bodily injuries to the occupants. Commercial auto insurance covers financial losses resulting from covered perils, including vehicle collisions, subject to policy terms and conditions. Reimbursing repair costs and medical expenses. B. Supports business operations and liability protection, ensuring Mr. Garcia receives compensation for vehicle repair and injury treatment within policy limits. Denying coverage. A. Due to vehicle age is uncommon under commercial auto insurance policies, which focus on risk management and coverage for specified perils, excluding coverage for collision-related claims. C. Or increasing premiums for future coverage. D. Are not typical policy responses but may vary based on specific policy terms and claims assessment. Question 109. Topic: Policy interpretation and analysis. What role does an insuring agreement play in an insurance policy under Colorado law? A. It outlines policy exclusions and limitations. B. It specifies policyholder obligations and duties. C. It defines the scope of coverage provided. D. It determines policy premium calculations. Answer: C. It defines the scope of coverage provided. Explanation: In Colorado, the insuring agreement in an insurance policy plays a crucial role by defining the scope of coverage provided to the policyholder. The insuring agreement C. specifies the risks or perils covered under the policy, outlines the conditions under which the insurer will provide benefits or compensation, and establishes the contractual obligations between the insurer and the insured. It serves as the foundation of the insurance contract, clarifying the extent of protection and coverage terms without addressing policy exclusions. A. Policyholder obligations. B. Or premium calculations. D. Which are typically detailed in other sections of the insurance policy. Question 110. Topic: Casualty insurance basics. What distinguishes casualty insurance from other types of property and casualty insurance policies under Colorado regulations? A. It covers losses resulting from unforeseen events. B. It includes liability coverage for third-party claims. C. It exclusively covers damage to physical property. D. It requires higher premium payments. Answer: B. It includes liability coverage for third-party claims. Explanation: In Colorado, casualty insurance differs from other types of property and casualty insurance policies by including liability coverage for third-party claims arising from bodily injury or property damage caused by the insured's actions or negligence. Casualty insurance B provides financial protection against legal liabilities and potential lawsuits beyond coverage for physical property damage to safeguard insured individuals or businesses from financial losses due to liability exposures. What casualty insurance covers losses resulting from unforeseen events. A. It extends coverage to liability risks associated with legal claims and damages, distinguishing it from property-focused insurance policies. Casualty insurance does not exclusively cover physical property damage, C, or require higher premium payments, D, but addresses broader liability risks and legal protections under Colorado insurance regulations. Question 111. Scenario question. Topic: Insurance claims. Scenario: MS. Newen owns a jewelry store in Colorado Springs, Colorado, insured under a commercial property insurance policy. A burglary occurs during business hours, resulting in the theft of valuable inventory. How will MS. Newen's commercial property insurance policy typically handle this claim? A. By denying coverage due to burglary exclusions. B. By reimbursing the wholesale value of stolen inventory. C. By excluding coverage for business interruption losses. D. By requiring MS. Newen to upgrade security systems. Answer: B. By reimbursing the wholesale value of stolen inventory. Explanation: Under MS. Newen's commercial property insurance policy in Colorado Springs, Colorado, the insurer will typically handle the claim by reimbursing the wholesale value of stolen inventory lost during a burglary. Commercial property insurance covers financial losses resulting from covered perils, including theft or burglary, subject to policy terms and conditions. Reimbursing the wholesale value of stolen inventory. B. Supports business continuity and inventory replacement, ensuring MS. Newen receives compensation for lost merchandise within policy limits. Denying coverage. A. Due to burglary, exclusions may apply based on policy provisions, but standard policies include coverage for specified perils like theft. Excluding coverage for business interruption losses. C. Or requiring MS. New and to upgrade security systems. D. Are not typical policy responses, but may vary based on specific policy terms and claims assessment. Question 112. Topic: Insurance claims. What is the purpose of a deductible in property insurance policies under Colorado law? A. To reduce coverage limits. B. To eliminate coverage for high-risk perils. C. To share financial responsibility between insurer and insured. D. To increase premium payments. Answer: C. To share financial responsibility between insurer and insured. Explanation: in Colorado, a deductible in property insurance policy serves the purpose of sharing financial responsibility between the insurer and the insured for covered losses. The deductible, C, represents the initial amount of money that the policyholder must pay out of pocket before the insurance coverage kicks in. By requiring a deductible, insurers encourage responsible risk management and cost sharing with policyholders, mitigating small claims and aligning financial incentives for property maintenance and loss prevention. Deductibles do not reduce coverage limits, A, eliminate coverage for high-risk perils, B, or directly increase premium payments, D, but influence policyholder behavior and claims handling practices under Colorado insurance regulations. Question 113. Topic: Underwriting considerations. What factors do insurers typically assess when determining premium rates for auto insurance policies in Colorado? A. Policyholder gender and ethnicity. B. Vehicle make and model, driving history and location. C. Homeownership status and income level. D. Personal credit score and employment history. Answer: B. Vehicle make and model, driving history and location. Explanation: in Colorado, insurers assess multiple factors when determining premium rates for auto insurance policies, including vehicle make and model, policyholder driving history, such as accident or violations, and geographic location. These factors, B, influence the likelihood of claims and reflect insurance risk exposures associated with vehicle characteristics, driver behavior, and regional accident rates. Insurers use actuarial data and underwriting guidelines to calculate fair and competitive premium rates aligned with risk assessments and regulatory compliance. Policyholder gender and ethnicity, A, homeownership status and income level, C, and personal credit score and employment history, D, may impact other types of insurance underwriting but are not primary factors for auto insurance premium determinations under Colorado insurance regulations. Question 114. Scenario question. Topic: Workers' compensation insurance. Scenario: Mr. Patel owns a restaurant in Boulder, Colorado with several employees. One of his chefs suffers a severe burn injury while cooking in the kitchen. How will Mr. Patel's workers' compensation insurance typically handle this claim? A. By denying coverage due to employee negligence. B. By reimbursing medical expenses and lost wages. C. By excluding coverage for kitchen-related injuries. D. By requiring Mr. Patel to hire replacement staff. Answer: B. By reimbursing medical expenses and lost wages. Explanation: under Mr. Patel's workers' compensation insurance in Boulder, Colorado, the insurer will typically handle the claim by reimbursing medical expenses for burn injury treatment and providing wage replacement benefits for the injured chef. Workers' compensation insurance covers employees' medical costs, rehabilitation expenses, and lost wages resulting from work-related injuries or illnesses, irrespective of fault or negligence. Reimbursing medical expenses and lost wages. B. Supports employee recovery and financial stability while fulfilling employer obligations under state-mandated insurance requirements. Denying coverage, A, due to employee negligence is uncommon under workers' compensation laws that prioritize employee benefits and liability coverage. Excluding coverage for kitchen-related injuries, C, or requiring Mr. Patel to hire replacement staff, D, are not typical policy responses but may vary based on specific policy terms and claims assessment. Question 115. Topic: Policy provisions and endorsements. What role do policy conditions serve in property insurance policies under Colorado law? A. They outline the insured's duties and obligations. B. They specify the coverage limits and exclusions. C. They determine premium calculation methods. D. They establish underwriting guidelines. Answer: A. They outline the insured's duties and obligations. Explanation: in Colorado, policy conditions in property insurance policies serve the purpose of outlining the insured's duties and obligations regarding policy compliance, claims reporting, and loss mitigation efforts. Policy conditions A. Establish contractual responsibilities for the insured to fulfill during the policy period, such as timely premium payments, property maintenance, and claims cooperation requirements. These conditions help mitigate insurer risks, support accurate claims assessments, and ensure policyholder adherence to coverage terms and conditions. Policy conditions do not specify coverage limits and exclusions. B. Determine premium calculation methods. C. Or establish underwriting guidelines. D. But focus on insured conduct and obligations under Colorado insurance regulations. Question 116. Topic: Ethics and professional conduct. What ethical responsibilities do insurance agents have regarding client confidentiality under Colorado regulations? A. To disclose client information to third-party insurers. B. To share client data for marketing purposes. C. To maintain confidentiality of client information. D. To store client records indefinitely. Answer: C. To maintain confidentiality of client information. Explanation: under Colorado regulations, insurance agents have ethical responsibilities to maintain confidentiality of client information, including personal and financial details shared during insurance transactions. Client confidentiality C. Safeguards sensitive information from unauthorized disclosure or use, maintaining trust, privacy, and compliance with legal and regulatory standards. Insurance agents must uphold confidentiality obligations except when authorized by clients or required by law to disclose information for insurance underwriting, claims processing, or regulatory purposes. Disclosing client information to third-party insurers. A. Sharing client data for marketing purposes. B. And storing client records indefinitely. D. Do not align with ethical standards for client confidentiality under Colorado insurance regulations. Question 117. Scenario question. Topic: Insurance policy analysis. Scenario: Mr. Johnson purchases a homeowner's insurance policy in Lakewood, Colorado, covering his primary residence. A severe thunderstorm damages his roof, leading to water leaks and interior property damage. How will Mr. Johnson's homeowner's insurance policy typically handle this claim? A. By denying coverage due to storm-related exclusions. B. By reimbursing repair costs and property damage. C. By excluding coverage for roof-related claims. D. By increasing premiums for future coverage. Answer: B. By reimbursing repair costs and property damage. Explanation: under Mr. Johnson's homeowner's insurance policy in Lakewood, Colorado, the insurer will typically handle the claim by reimbursing repair costs for roof damage and covering interior property damage resulting from the thunderstorm. Homeowners insurance policies cover financial losses from covered perils, including wind and hail damage, subject to policy terms and conditions. Reimbursing repair costs and property damage. B. Supports property restoration and mitigates financial losses for Mr. Johnson within policy limits. Denying coverage. A. Due to storm-related exclusions may apply based on policy provisions, but standard policies include coverage for specified perils like thunderstorms. Excluding coverage for roof-related claims. C. Or increasing premiums for future coverage. D. Are not typical policy responses but may vary based on specific policy terms and claims assessment. Question 118. Topic: Insurance policy analysis. What is the purpose of endorsements and riders in insurance policies under Colorado law? A. To limit coverage for high-risk activities. B. To exclude specific perils from coverage. C. To modify or expand policy terms and conditions. D. To increase policy deductibles. Answer: C. To modify or expand policy terms and conditions. Explanation: in Colorado, endorsements and riders in insurance policies serve the purpose of modifying or expanding policy terms and conditions to meet specific coverage needs or circumstances beyond standard policy provisions. Endorsements and riders C. Allow insurers and policyholders to customize insurance coverage by adding, deleting, or altering policy terms, conditions, or limits, ensuring tailored protection against unique risks or preferences. While endorsements can address high-risk activities A. or exclude specific perils B. Their primary function is to enhance policy flexibility and accommodate individual insurance requirements without increasing policy deductibles D. Question 119. Topic: State insurance laws and regulations. What role do state-specific insurance regulations play in property and casualty insurance practices in Colorado? A. They establish uniform insurance contract terms. B. They standardize premium calculation methods. C. They ensure compliance with consumer protection laws. D. They dictate insurance company ownership structures. Answer: C. They ensure compliance with consumer protection laws. Explanation: in Colorado, state-specific insurance regulations play a critical role in property and casualty insurance practices by ensuring compliance with consumer protection laws and regulatory standards. Regulations safeguard consumer interests, promote fair insurance practices, and enforce transparency in insurance transactions, including policy issuance, claims handling, and premium rate setting. State regulations do not establish uniform insurance contract terms or standardize premium calculation methods but focus on regulatory oversight, consumer rights, and industry accountability. Insurance company ownership structures may be subject to regulatory oversight but are not the primary focus of state insurance laws in Colorado. Question 120. Scenario question. Topic: liability and legal concepts. Scenario: MS. Martinez operates a small business in Fort Collins, Colorado, specializing in home renovations. A client accuses MS Martinez of property damage resulting from incomplete work. How will MS Martinez's commercial general liability insurance policy typically handle this claim? A. By denying coverage due to business operation exclusions. B. By reimbursing legal defense costs and settlement expenses. C. By excluding coverage for professional negligence claims. D. By requiring MS Martinez to cease business operations. Answer: B. By reimbursing legal defense costs and settlement expenses. Explanation: under MS Martinez's commercial general liability insurance policy in Fort Collins, Colorado, the insurer will typically handle the claim by reimbursing legal defense costs for defending against property damage accusations and covering settlement expenses if found liable. Commercial general liability insurance covers financial losses arising from third-party bodily injury, property damage, or personal injury claims, subject to policy terms and conditions. Reimbursing legal defense costs and settlement expenses supports business continuity, legal protection, and liability coverage for MS Martinez within policy limits. Denying coverage due to business operation exclusions may apply based on policy provisions, but standard policies include coverage for specified perils and liability claims, excluding coverage for professional negligence claims or requiring MS Martinez to cease business operations. D. Are not typical policy responses but may vary based on specific policy terms and claims assessment.